transfer banks to have it, to have the mobile banking or app banking for the outward remittance also. Once we have this facility, inshallah, IT sector, freelancer, startups, we will be having our own pioneer in Pakistan, inshallah. So wish you good luck. A lot of things are happening, and we have like more collaborative way with this side and with the Pasha's area, and would be more interested to discuss on the policy side, because we are in terms of the state bank side, the MPR side, working closely a lot what Pakistan need, and this is a role of the banks to have more facilitation as per the state bank policies in Pakistan. So thank you very much once again. Pakistan Zindabad.
Thank you, Mr. Zohaib. What I've been told about the next speaker is that he travels internationally so extensively that he only transits through Pakistan for visa purposes. We're lucky to have Mr. Nasir Akhtar, Chairman and CEO of Infotech, amongst us today. Sir, please welcome on stage. Thank you very much.
Assalamu alaikum, good morning. There was a little bit of exaggeration. I spent at least, because I'm a tax resident in Pakistan, so I must be spending more than 180 days in Pakistan. So yeah, but that's true. Over the past 15 years, we have expanded our reach and operations and delivery capability up to as far as West African countries like Ghana, Nigeria, Angola, and all that. And we are doing, and I mean, it's not only us. I mean, I know at least a dozen companies who are doing phenomenal work across Middle East, Africa, Central Asia, and even sometimes to Europe as well. The companies who are serving banking sector are doing phenomenal work. So I will share some research. The bankers would be very happy to hear that. Being associated with Pasha, I mean, and being a researcher myself, we do a little bit of research before we enter into a market. So that is in our DNA to find out what's happening. For those who don't know the size of domestic market, it's shamefully small as compared to our peer countries. But nevertheless, banking sector contributes to almost 26% of the total IT spend of the country. That's a great thing. And another probably 22% or 20%, there is a conflict in the number, but that is done by telecom sector. So the rest, 55% is all the sectors, and government particularly is probably this smallest contributor, which is very unusual, as governments are usually the highest spenders in technology. Okay, now in terms of capacity to serve banking sector, I think banking sector in Pakistan has been enjoying extremely structured kind of services available in Pakistan, but at the same time, I mean, that's for State Bank particularly, because they keep asking about the numbers and all that. The services being purchased by banking sector is also substantial. It's around $150 to $200 million that they pay for the services, and mostly outside Pakistan, the multinational companies, the vendors who come for, which can be easily substituted. So that is something that I would like to emphasize, that banks should sit and with the industry and find ways that how can it be substituted in order to save on the dollar crunch that we had. And in fact, banks over the past couple of years, we have seen suffered a lot. So I see that piece missing over here in the banking sector, that how do they find ways to overcome the difficulties such as hardware or the software licenses over the past couple of years. We as a vendor also suffered, but banks suffered more, and it becomes extremely vulnerable when you are not paying timely to your vendors outside, and it can lead to disasters as well. So we faced similar situations in Ghana and Nigeria at one time, and we found that they are so creative. They went to central bank and suggested them to have a US dollar account for their purchases from outside. That's how they actually overcame the problem of currency fluctuations. For example, in Nigeria, sometimes it went, there was 10 to 15% even in a day. So that was something that those countries have done for themselves. So I would suggest banking sector to convince central bank to allow a kind of quota or whatever consumption of foreign currency that you need in order to streamline your imports of whether it's hardware or licenses or services. The last thing that I would like to see is it's painful that the domestic industry consumption by banking sector of the services is the lowest that we can see in any sector. Telecom, for example, about 85% of the services are consumed from local companies and local vendors. Whereas in banking, only about 40 to 45% of the services are consumed locally, which can be taken to 80, 85% very easily, because the kind of thing that some of the companies are doing here in Pakistan as well as in Middle East and Africa is phenomenal, and that can be utilized in Pakistan. So taking on the Pasha's lead and the need of the hour is Make in Pakistan. Trust me that the Pakistan ICT industry has a phenomenal capacity to serve banking sector and the digital eras in all other sectors, including telecom and GovTech, for example. So that is my take for the day, and I encourage.
Naveed Beg, the CEO of Innovative Private Limited. As I'd mentioned, Innovative has been a firm supporter of this event for the last 21 years. Mr. Naveed, welcome on stage, sir.
Bismillahir Rahmanir Rahim. Assalamu alaikum. Very good morning to everyone, particularly those who are on time today. Special thanks to all the people who have flown in from various parts of the world to attend this program, particularly Habib Hanna of T-Bold next door, Osama, Ivo Vulcans, Robin Dutcher, and some of the others. Innovative is always proud to be associated with this event as title sponsors, together with Diebold Nixdorf and Giesecke and Devrient, our partners, and now Masterworks Auto Modules as well. So, yeah, a very good beginning from Zohaib and Nasir Sahab to give you a perspective, the big picture of the situation prevailing in the country vis-a-vis the IT world. I would like to give you a perspective and talk about the landscape that exists when we talk about the future banking itself and the digital channels that prevail in the country. So let's hit the nail. Okay, so the digital channels that are available, and these are being categorized as mentioned by the State Bank of Pakistan, the real-time online banking, the ATMs, the point of sales, POS terminals, internet banking, mobile banking, call centers, and the e-commerce channel. Okay, so let's see how they are doing or how they have been faring in the last 2 years, the last 2 fiscal years. Okay, so the volume of the real-time online banking grew by 1% in fiscal, the fiscal 21-22 over 22-23. So 1% growth in volume, and the value grew by 18%, which clearly shows that the inflation factor has kicked in. The average ticket size is also mentioned here. Also the number of branches of banks from 16,788 to now more than 17,500. Okay. The ATMs, this is of keen interest to us, of course. 16% growth in the number of transactions from 508 million to 589 million, almost 590 million. And the value grew by 26%. So this is quite considerable and also in line with the inflation figures. Then you talk about the average ticket size. This also reflects the inflation figures. The number of ATMs have grown from 16,897, as reported by the State Bank, to 17,678, which is a 5% growth. So, whereas the number of ATMs sold in the market has been considerable, particularly in the last 2 years, thousands of ATMs have been sold, but most of them have been used as a replacement of older ATMs. So the number of ATMs that grew was only 5%. Okay? The POS, good figures to report, 48% growth in volume and 52% growth in the value, the average ticket size, and the number of POS terminals. I mean, 96,975 to 112,000. Now, we've been seeing that the figures remain stagnant around 50,000 POS terminals for a very long time in Pakistan. It's only in the last 2 or 3 years that the figures have grown. I will, towards the end of my short presentation, I'll be showing you that the number of POS terminals, for instance, in a neighboring country, it's, for a change, it's not India, it's Iran. You know the number of POS terminals in Iran as compared to 112,302 in Pakistan is 7.3 million. Food for thought. Internet banking, you can see consistent with some of the trends that we've seen. And this is the mobile phone banking. Again, we see a surge in the number of transactions as well as the volume, the value. The average ticket size also grew, and of course, the number of users have grown to 15.26 million. Call centers is on the downturn, although the value has slightly grown, but now it's more of a mobile world than a call center world. The e-commerce, somehow is not doing as great when it comes to the volume. I don't know. Somebody belonging to this segment of the industry would have to comment on that. But the value has grown, and this is the average ticket size and the number of merchants. 6,500 merchants. I mean, come to think of it, there are about like 250,000 merchants, I've heard. So the total pie of this whole digital world is here for you. The obviously the real-time online banking is the largest, but the ATM segment is, of course, after that, the largest channel for the people. And this is the volume. Okay. So when you look at the performance of the banks during the last fiscal year, I mean, the total number of assets have grown by 18%, net assets grew by 7.9%, and the PAT has grown by 47.8%. This is the industry-wide figure. So the banks are doing really, really well. So when Nasir Saab tells us that 26% of the budget of the IT industry in Pakistan is spent by banks, no small wonder, actually, because the banks are doing extremely well as compared to some of the other segments in Pakistan. But what are the key challenges that we've been facing? Some of them have already been mentioned, like the import restrictions or the paucity of foreign exchange. But, you know, together with that, we've had a very high inflation rate, a devaluation, we've had political instability. And when it comes to, you know, the hardware part of the business, there have been, you know, supply chain disruptions due to the chip shortages and the semiconductor business facing difficulties in production. So if you look at the ATM infrastructure as compared to some of the other countries of the world, we have 11 point something for 100,000 people in Pakistan. Now, this is based on the old census figures. If we use the new census figures, this is actually a rate of about 7 or 7 point something, which is as compared to, let's say, India, we are nowhere. I mean, we have a lot of road to cover. Look at this figure, Iran. I mean, it's mind-boggling. USA, okay, we don't want to talk about that, but South Korea is like 450 ATMs per 100,000 people, okay? So the post-terminal infrastructure, Pakistan is 49, this is what I was talking about, and look at Iran, look at India, look at China. So, I mean, where are we? And what are we doing about it? So these are the realities of our economy. 60% of the economy is outside of our tax system, 60% of the economy. So we're just talking about 40% of the economy always. I mean, this is a reality. Ishrat Sahab also mentioned this in one of his speeches a couple of days ago. 40% are unbanked, 40% are below the poverty line. And now this figure has actually gone up in the last 3-4 years, considerably. So, I mean, this is something that only the governments can do, but what can the banks do? I think if they're able to focus more on the consumer and the SME segment instead of, you know, using all their treasury funds to be parked in the government securities, I think we can have an effect on reducing the hardships by 50% and increasing the benchmarks at least by 2x. So this is not something which is undoable. Let's hope that this is carried out in the future, but not in the too far, okay? Thank you very much for your time.
Thank you very much, Naveed Ali Beg Sahab. forward? Okay. Now we have Mr. Habib Hanna, Vice President and Managing Director of Middle East and Africa at Diebold Nixdorf. And I will remind our audience again that Diebold Nixdorf has remained a steadfast supporter of this event over the last 2 decades. Sir, welcome.
Good morning. I'm not gonna sing, guys. If you're motivated by the music, this was just to get started. But before I start, Naveed, amazing data points. You made it very easy for me. There was a lot of data points I wanted to get for the presentations. You gave it to me. And before I start, I want to thank the organizers. And let me tell you, I don't know many conferences that can put a magic number like 21 on the screen. So this is the 21st edition of the same event. And to be honest, I would definitely think that this is only possible because this is not only getting everyone together, but also getting some valuable insights. And the name of the event, Future Banking, which, by the way, the future is today. Because today, and what I'm going to cover is what are the major changes, what are the paradigm shifts that are happening in consumer banking specifically. And when we talk about consumer banking, the shift of power is moving from banking to the consumer. Today, it is definitely the consumer age. It is the preference and the presence of the consumer that is mandating how consumer banking should look like. And when I mention presence and preference, this is simply the dilemma of digital and physical. And Naveed was giving very interesting data points. Definitely digital is growing at much higher pace. And if I quote the data point, 28%, 38%. But at the same time, even in Pakistan, branches are also growing, 4%. The ATM touch point is growing 4%. And also, if I take the data point, 17,500 branches, almost the same number of ATMs. And there's a reason for this, because obviously, central bank demanded that for every branch there has to be one ATM. So this is why numbers are tallying in place. But is this really the way that consumers are demanding in terms of engagement? So if we look at from a self-service perspective, and self-service have evolved, so it's not longer, or it's no longer an ATM that does only cash. Today, a point of presence through our self-service, you can drive more than 50 to 55 services, banking services on one terminal. So this goes to the first driver, which we call it automation. And automation is definitely the ability for you to drive more and more services into the self-service touch points. Now, this is a physical touch point, but it's digitally enabled. And this is where it takes you to the second, basically, driver, which is the branch virtualization. And I will touch base today. Naveed spoke about the ATM density per 100,000. I will talk about the branch density per 100,000. And there's a big question today. Why would a customer walk into a branch if he can do everything digitally? Why do I need a branch today? And if I take 21 years back when this event started, and maybe I'll be interested to look at the content, there's definitely one question which is still trending. Do I need the branch as a bank? And I will try to answer this question as I go into the presentation. Do I need the branch? Will the branch of a bank still exist? And why? And this is something that I will cover also in the presentation today. The third driver, which is becoming extremely important, we call it individualization. Trends call it personalization. We call it individualization. Every single consumer is unique. With the AI engine that are being developed, and I know some of my friends today are going to talk about AI, Wakas and the team, you are able to predict the consumer behavior and pattern and be able to be relevant to that consumer. There is no longer what we call general banking. It's individual banking. And this is a major driver. How can I engage more interactively, proactively, more relevant with the consumer? That will allow you as a bank to grab the market share, the wallet share, the heart share of the consumer. And the fourth one, if you ask the question across the whole globe today, every single banker, there's one thing on their mind. How can I be more efficient? How can I drive more efficiencies? And in Pakistan specifically, and specifically in self-service, there's a huge potential for efficiency. And the magic word is recycling. Today, if I look at Pakistan as a market and I look at the self-service touch point, probably only 2%, maybe even a bit less, that drive automated deposit. There is none of those that are recycling today, probably few pilots. But recycling today drives a huge operational efficiency when you look at the bank touch points. The ability for you to recycle the cash by deposit and by dispense from the same automated system, this drives amazing cost efficiencies. And obviously, if you touch on or if you grab also digitalization in place, the ability for a consumer to start a transaction on his mobile and terminate it on a physical touch point, this will drive operational efficiencies in a great way. Now, and this is something very interesting, and I always try to correlate different industries. And let's be very open today. In my view, the best industry that grabbed that seamless journey, customer journey, end-to-end is really the travel industry. And Naveed was very kind to thank us for traveling around, although this is one of my best pleasures to be in the amazing city of Karachi. But while I was traveling yesterday, I can tell you, I had zero physical interaction, zero friction with anyone, including security officers. Why? Because I used my mobile to book the flight. This was the originating of the transaction. I walked into the airport, and if you probably travel through Dubai and you see the e-gate, you don't even need to take your passport out of your pocket because everything is through biometric. So I'm authenticated through my biometric, where the gate opens automatically, so I don't see any security officers. I walk into the business lounge, and I use my code on the phone to just recognize me, and then I open and I get in. And then I walk into the gate. Well, this is where they need to ask me for my e-visa, which, by the way, if you look at it forward, if you are able to upload the visa as well digitally and being recognized, then that last connecting point is gone. Now, while you are moving around, there are incidents which could change. The gate could change, and you could get that notification on the mobile, so you don't have to look at anywhere else. I was able to know the gate of my travel while I'm in the taxi, because I got it also through my mobile. So I didn't even have to stop and look at the screen. This is an amazing consumer journey. Now, if I take it to the bank journey, it's a bit more complex because it includes transactions, engagement, payments, etc. But if you take that analogy and apply it to the consumer journey in banking, this is exactly what the consumer wants to know. He wants to be able to control all incidents, all exceptions that happens. He needs to be able to originate a transaction through his favorite device, which is his mobile, but he could have a preference to go digitally through a transaction that could be terminated physically through a touch point, be it an ATM or a kiosk, or basically any other channel that he sees. The difference between what we used to talk about, multi-channel, omni-channel, etc., this is gone. This should be what we call a complete seamless journey, a complete banking. Individualization has to go regardless on which channel the consumer is touching on. Now, if you look at from a self-service perspective, well, and I started saying it's a physical touch point that is digitally enabled. This is the convergence of physical and digital. And how can you make it more relevant for the consumer? Is by being able to allow him to pre-stage a transaction. Is by being able to know that throughout that touch point or interaction, I'm able to communicate to the customer and tell him, by the way, you are eligible for a personal loan. Are you interested? This is engagement. This is touch point. This is the ability for you to elevate the engagement of the consumer. Now, remember I started by saying a very important question. With this digital evolution, with this digital enabled, with this what we call the frictionless journeys, why would I still need a bank branch? Would bank branches still exist to serve consumer if I can do everything, including onboarding? And I know there is a national initiative around eKYC. So basically, you are able to onboard a customer digitally without the need to go to a physical branch. And branches, in that perspective, a very important cornerstone of banking, are they going to be diluted? And this is where I would like to run a few data points. Although, if I look at Brett King, the famous author of Banking 2.0, and a very famous book that comes, branch today, is it gone tomorrow? Is it going to stay, etc., etc.? So one interesting element that we've done as Diebold Nixdorf with YouGov institution is we asked few consumer, why would you typically visit a branch? McKinsey has made one research where they have actually mentioned that 9% of bank branches have went down, they've closed, 9%. But guess what? If you look at the branch usage, as per McKinsey, only 1% went down. So while branch usage went down only 1%, 9% of closure has happened, huge imbalance, which means customers still want to go to a branch because the usage is not going that down. But there are multiple reasons why a customer would go to a branch. Sometimes above the limit withdrawal of an ATM, he needs to go to a branch. And always think of, can I also migrate those transactions into a digital physical touch point outside the branch to be able to cater for what we call the in-branch services? I need to actually be identified, or I need to have a physical signature. So basically, I need to sign on a loan paper, I need to be onboarded, I need an ink signature. And again, the question, can I migrate this transaction? Just remember those questions, and I will share it with you. If I actually need a bit more intelligence or more advisory, if I have probably more high-value transaction that I'm worried about, I still want to go to a branch. Now, if I am able as a bank to cater for those 4 reasons of why customers are still going to a branch, the same question, will the branch still exist? And as a bank, you definitely would like for customers to come into a bank type of an environment, because this is where, again, wallet share, heart share will be captured. This is where you are able to engage more importantly with the customer. Now, ATM density from that perspective, let's look at it from this angle. And I'll give you a couple of benchmarks. So Naveed just made it very easy. He said with the new population, if you apply ATM density on 100,000, it's number 7. That's what you've mentioned. And I know it's 11, but if you apply the 240 million over 17,500 branches, for every 100,000 inhabitants, you have 1 branch. Now, guess what? This is exactly the same number we have in the UAE. For every 100,000, there is number 7. Now, go to the US. For every 100,000, 28 branches. Go down to UK. For every 100,000, 25 branches. Go to South Asia. Every 100,000, 15 branches. So in Pakistan specifically, including also in the neighboring countries, there is still, only if you look at the density, huge potential for you to actually look at coming closer to basically my consumer. Do I need to build branches to have a bank branch? Or is there another answer for a bank branch? And this is what we will reveal in just one moment. And by the way, if I look at JP Morgan, in the last 4 years, 650 branches were opened. Digital presence still important. Now, if I go a bit on the financial perspective, with the high interest rate and the deposits being very important for banks, obviously there will be a bit of motion into opening branches. But do I need to have those big brick and mortar branches? The answer is very simple in our perspective. Branches will still exist. And even more, in our view, there will still be room for expansion into branches. But they will not be the branch that we see of today. It will be a repurpose of the branch, a remodel of the branch, a new actual ergonomics of the branch. And the way we see it, in a very simple way, it's kind of what we call the pod branch concept. So it's basically, I could go anywhere. I could go into a shopping mall, into a very small footprint, and build, and remember the reason why a customer walk into a branch, above the limit withdrawal, I can drive it on the self-service. Signature, I can drive it on the self-service. Being able to give a credit card or a debit card to a customer, I can drive it through the self-service. Being able to have an advisory engagement, I can drive it through video terminals into the self-service. Being able to have multiple high-value transactions, I can drive it into those types of branches. This is the branch of what we call the future that is today. This is how customers today are solving this big dilemma of, do I need a branch or not? And if I actually dilute my branches, do I lose the touch point of the customer? Definitely yes. The answer is in the middle. It's a remodeling of a branch whereby technology with engagement are replacing the old brick and mortar traditional bank tellers that we see of today. I tried to answer a question that remains unanswered for 21 years, but this is how branches will look like. The ability for you to have 24/7 space that basically will have one teller, maybe 4 tellers, maybe 2 tellers, that during working hours you have a human interaction, and outside the working hours you have a 24/7 technology interaction. It's as simple as that. The ability to combine virtual, physical, digital into one ecosystem. This is what we call banking transformation. This is what we call branch transformation. Now, I wanted to also highlight to you, this is not only the future, this is today. And I wanted to bring to you some use cases from neighboring countries. Abu Dhabi Islamic Bank, if you go and Google, they call it the mini bank. This is exactly what I showed you, futuristic. It's happening today. And this is whereby more than 40 services are being conducted on those types of mini bank with digital kiosk, including onboarding, card printing, checkbook printing, transfers, remittance, loan originating, loan terminating, advisory, any type of in-branch services, above the limit withdrawal, check encashment. So I have a check, I want cash, I can do it online, put the check, take the image, verify it, dispense the cash, complete the transaction. Again, drivers for a customer to go to a traditional branch, now he is going into a digital branch, into a pod branch concepts that we've actually spoke about. Other customers, rack, again, above the limit withdrawal. Remember, one of the 4 reasons why I would walk to a branch, you can do it through an interactive video terminal where customer can be served by a virtual agent and ability for you to authorize those transactions. Instant check encashment, ability for me to walk with a check. And by the way, I don't have to be the bank customer. I can just be authenticated with my card, my national ID, my fingerprint, put a check, get the cash. You're able again to migrate transactions into various touch points. Again, more and more examples. And the reason I'm showing this is definitely not to say that, we have a big market share, but to tell you that use cases are live. Again, virtual terminal machine, or basically virtual terminal system where you can do above the limit cash deposit, you can do above the limit cash withdrawal, instant check encashment, checkbook printing. So I can walk into a digital branch, pod branch, walk out with my checkbook. Remember, this used to be a 2 to 3 days type of transaction. I place the request, whether through the call center or the branch. I have to wait for a few days for the check to be printed, to be delivered to me. This was 3 days. Today, it can be done over basically 2 minutes, over basically a transaction that you can do. And this is, again, a new model of a branch. Ahli Bank in Oman, again, what they call it, they label it Ahli Digital Express. Account opening for new customers. Again, I don't walk to a traditional branch. I walk into a pod branch. I walk into a digital branch. You still need physical interaction, but it's digitally enabled. And this is the power of technology. This is the power of convergence of digital and physical. This is what I mentioned. The move of power is going into the consumer because it is the preference of the consumer. Will I still have a consumer that wants to go to that 250-meter square branch? Yes, they will still be consumers that prefer to go to those big branches. But again, it is the preference of the consumer, and you need to be able to cater for that, expand your footprint in a more efficient way that is driving transactions and cost efficiencies at the same time. And again, the answer is what you are seeing today live, and those are live examples. Again, Al Maria Community Bank, those who are from UAE knows that this was supposed to be a digital bank. However, they found out the best way for them to cater for a bigger addressable market, and they don't want to go into branches because it's a digital bank. Now they have digital corners. Those are the kiosks where they can do account opening. You still need ink signatures, so that happens there right and then. At the kiosk side, statement printing for different purposes, instant card issuance, a customer walk in and out in 1 minute with his card. Of course, checkbook issuance, KYC, etc. In that perspective, you know, whoever went to Qatar during the World Cup, I went 4 times, I love football. You know, you could probably visit one of our digital branch as well, where you can do different types of services. Again, interactive. You can actually have above the limit withdrawal. You have instant check encashment. And again, remember, 24/7. It's a walk-in area that actually split between what is 24/7 and what is traditional banking in that perspective. So, and I know I'm running out of time and a lot of people are waving for me. I think the moral of what I've described today, that question, 21 years back, we started here. Will the branch still exist? Do I still need a branch? And the answer is very simple. It's a different purpose. It's a different model. It's a pod branch, built on technology, physically present, digitally enabled, drive the banking automation, that consumer journey to be able to capture not only the wallet share of your customer, the heart share of your customer, and remember, it is the preference and the presence of the consumer that dictates, that mandates what type of engagement he needs to have with you as his bank. So thank you very much, and great pleasure to be here today.
Thank you, Habib. Sorry, am I audible? Yeah, okay, perfect. Our next speaker, Mr. Mohammad Yahya Khan, is the Chief Digital Officer of Bank Al Falah. Since 2018, he has over 27 years of banking and non-banking experience with leading organizations such as ICI, Engro, Unilever, AXA Sun Life Services, PwC, JP Morgan Chase, and Telenor. Sorry, guys. Yahya is a fellow chartered accountant from England and Wales and holds an engineering degree from NED and an MSc degree from Cranfield. Yahya, welcome on stage.
Assalamu alaikum. All right, okay. So I've been speaking at this conference on and off for about 9 years now. And one thing that I like to talk about from the practitioner's point of view, the trends that we are seeing in banking or digital banking, to be more specific, and how digital banking is changing the shape of the banks itself. Some of the trends that we talk about, at least the ones that I have talked about in the past, have taken off, others haven't. So take it with a pinch of salt, the ones that you think are going to take on. But everything that I'm going to say here are the ones that we are trying out. The ones that scale or don't, we don't know. So I think this is a good segue into the, my colleague just talked about from Diebold about the phygital banking. And yes, we are seeing it. And And one ratio that we follow religiously is our digital to over-the-counter transactions ratio. So that for us is about 75% now, right? So if you think about it, we would think, great, so we should shut down 75% of our branches. But if I give you another ratio, it might put things in perspective. Our ratio of new account openings in which there are deposits digitally is less than 5%. And that's why the branches are needed. And I think we talked about earlier that, transfer some of the transactions to digital at the counter. Yes, I think that remains the case. We feel it's demeaning and inhumane almost for humans to be conducting those check and cash in and out transactions, and those should be conducted by the machines, absolutely. But more importantly, why the branches are needed is because they elicit that trust in a deposit-taking institutions. So I totally agree that branches will stay, in fact, might grow, but what happens inside a branch shall materially change. So the transactions shall move to a combination of in-branch machines and, more importantly, completely remote. So people don't even have to come to a branch in order to conduct the transactions, including some of the ones that we were seeing, the signature verifications and others. There are now technologies that exist. But why they would come to a branch is, first, they want that comfort of heart, that there's a deposit-taking institution that exists in reality. And secondly, and more importantly, if I can get a sales advice when I come to that branch. So for those of you who have visited, we've piloted with one such branch at Zamzama. And there, when you walk in, for those of you who have gone in, you would not see any teller. There is no teller at least on the ground floor when you enter. And we've tried to hide the teller as much as we could, so they are somewhere in the basement. Our total transactions in that branch, I gave you the ratio of the overall bank, 75%, but in that branch, 96% of all transactions are being carried out on machines. So it's working. But what would happen is, what we have also tried to do is to put in the sales and advisory people in those branches. So do you guys realize that if you go in a bank branch, in Pakistan at least, and ask for a credit card or an auto loan or a personal loan or a home mortgage, what happens? It's a lead generation engine. So branches are generating the lead. They don't have qualified people advising you on any of these 4 loan products. I don't know whether you guys knew that or not. Similarly, if you walk in and say, I want to discuss wealth management, or want to open a securities brokerage trading account, what will branches say to you? They'll say, call the call center of our asset management company and call the call center of our securities brokerage house. So again, we feel, rightly or wrongly, that the branches of the future shall have all of these elements of sales and advisory. So there are more qualitative conversations that are taking place in the branches, and the menial transactional services shall move to machines or remotely through the apps. We like it. I think I loved some of the machines that were being displayed here. Over the years, through experimentation, banks in Pakistan have also developed such machines, such as cash deposit machines, and the next generation of those cash deposit machines also. One thing I would say, again, as a practitioner, to our colleagues who are the suppliers of these technologies, it's incumbent, just like there are many things that are incumbent upon us as bankers to do, it's incumbent upon the vendors and suppliers to continuously do innovation and bring the price point of these machines down. It's not easy for a Pakistani bank that earns in Pak rupees to be able to buy a machine worth between $20,000 to $30,000. And if it happens, then it's just a marketing thing. We may be able to afford 10, 20, 30 machines at best, but an average size bank in Pakistan has 1,000 branches now. So it's impossible almost to have that scalability. We talked about check deposits. I think the next innovation in Pakistan is going to be on instant clearing of checks. Not just using check deposit as a digital safe deposit box, which is what it is being used today, but actually instant clearing. So using sophisticated image processing to match the signature on the check with that on the signature card, using other secure tokens and keys on the instruments, and validating the issuer through multiple means and that of the instrument. So if you talk to any banker, they'll tell you the two biggest transactions that take place on the branches are check and cash. So cash, to an extent, has been digitized, whether remotely or at the branch using the machines, but there is hardly anything that is being done on the checks, and check remains one of the largest components of this transactional banking in the machine. So watch out the space there. I think automated teller machines we talked about, yeah, I think that was the first digital innovation at least this country has seen, and they remain fairly static ever since. There is still the interface of those clunky buttons that we press, and it just churns out the money, which is fine. It does the purpose. We do believe in single-purpose machines. We, at least as practitioners, don't believe in multi-purpose machines because it occupies a lot of time, and often consumers end up using just one function out of many from that machine. So single-purpose machines are fine for us. But there needs to be some innovation, as I think my colleague talked about earlier, how a transaction can be initiated from an app and terminated on the machine, where the security can actually go onto the app. Again, from the practitioner's point of view, there are lots of frauds that are happening on ATM machines, not just that of card, on which I think the industry and the vendors have done a lot of work, but very simple frauds such as putting the Elfie on the keypad. I ask all of us, why are there still keypads on ATM machines? Physical, mechanical keypads, when everything else is happening on the screen. You can touch, you're choosing the denomination, you're choosing not denominations yet, but now I think the next point would be that you can choose the denominations, but you're doing everything else on the screen, just entering your PIN on the clunky mechanical keypad. And that's where the frauds are now taking place also. People are putting Elfies around it and fetching your card. So they need to go. Also, a few of you may be familiar that now banks have also been requested to come into the FX, foreign exchange companies or houses, where the buying and selling of foreign currency against Pak rupees would take place. And here is an opportunity for all of us, the practicing bankers, to digitize those services right from the word go, as opposed to conducting the same way that these FX houses functions are performed, which is cash acceptance and cash dispensing by the humans. We heard about account opening terminals. So I talked about earlier, while we are seeing some traction in consumers opting on digital means to opening the accounts, as I said, it's less than 5% for us, right? And we are also seeing that the average deposit in those accounts is also much higher than what I'm used to seeing in my previous jobs, whereas the average deposit per remote account opened was less than 1,000 rupees. Here we are seeing over 75,000 rupees per account, but as I said, the number of accounts in total in aggregate or the deposits being raised is very small still. Our experimentation, at least with that, is, once again, we have tried the virtual teller machines, but people either use it completely remotely if they wish to open an account in a bank remotely, or when they come into a branch, they want somebody to assist them, and that somebody preferably a human as opposed to a teller on the other side of it. What we have seen is this. So we are experimenting with various different things as to what would be the right model of an account opening inside the branch. And one such thing that we have also done, I can see Mohib is also here. Together, what we have done is that the experience of opening an account once you're inside the branch, that is over 95% paperless. That's working fantastically well. So instead of signing the papers and everything. And that's a good example of automation. But how do we completely digitize and stop people from coming into a branch? That requires changing in behavior of consumers. It's not as easy as giving it the best UI UX and the consumers opts to never come into a branch to open an account and transfers 200 million rupees into us. We have seen that. We have also seen that. But those consumers are very connected consumers who know that this bank has been there for X number of years and I'm happy to just open an account digitally and transfer 200 million rupees. We have seen that. But as I said, the ratio is still less than 5%. The other thing that at least we are seeing, or at least we are trying to do it is, look, you know, most of us are in this profession, so we know this. Banking is not the most liked profession in the world, and the type of emotions that banking elicit from people are very functional. There's no emotional feel with banking, and hence the average time a consumer spends in a bank branch or interacting with a banking app is very small compared to the rest of their lifestyle needs. So what we are trying to do is how we combine or how we bring the feelings of or different emotions when they're interacting with the bank. Moving on, buy now, pay later. So again, we have been experimenting with this and we have a significant book. We also have an e-commerce marketplace where a large proportion of everything that we sell is on buy now, pay later. And the same is now also works on the proximity payments also. And what we have seen is we are also being the net beneficiary of the high interest rate environment and the high inflationary environment. So consumers wish that the purchase is broken down into installments, often irrespective of the amount of interest that is being charged. I think we get too bogged down with what is the amount of interest that is being charged. Fair enough, but those considerations are people who have means to pay. Who don't have means to pay, which is where the banking really comes in to give people what they want and desire. They really don't care about it. They just want that thing which is their need. Okay, I'll finish in 2 minutes. Metaverse is another thing. I think if all of us, the digital banks, the banks and EMIs are wishing to attract the Gen Zs, will have to exist in Metaverse and look like avatars. And I think we should be where our consumers are or the next generation of consumers are. So a lot of work is being done, certainly in my institution and in others, to open the branches in Metaverse. Last few, machine learning is a fantastic thing. I think sometimes we just glance over things and we just go so quickly in machine learning and artificial intelligence and we don't really stop to think what it actually means for us. We are adopting machine learning, for example, in check clearing. So a person's checks are going to be learned to the machine and the machine would learn that this person writes generally this denomination of check, generally writes between the 1st and the 10th of the month. This is how their signature is, and this is what the beneficiary is. So we are teaching the machine. So next time when the check comes, we are using that machine learning algorithm to clear the check, even if some of the fundamentals don't exactly match with each other. Bots, also we are using bots. Once again, the transactions, the interaction for transactions between a human to a human should be between a human to a machine. For those transactions that are easily convertible, balance inquiries, my last statement balance, my last 10 transactions, those kinds of things, they're now moving to bots, and about 34% of our call center volumes are now moved to bots. People don't want to talk to a human. They prefer, if it's easy, then they'll just talk to them. And they'll just do it through a bot. Robotic process automation, there are many applications again, and within our bank, we've been working collectively together in digitizing some of it. Some use cases are, again, for those practitioners, we conduct the QA of our use cases for our app before every release, and there are like thousands of tests that are there. And in most organizations that I know of are all manual. So we are conducting those tests before every release manually. So one such application, again, in practice that we see and we are doing it is converting those test cases using the robotic process automation. I think I'll cut down a few because I've run out of time. And finally, the last two is cybersecurity. So while it's very, very important, we are seeing as a result of the 75% of the transactions of our bank having moved to digital channels, we are seeing an enormous amount of throughput in trillions of rupees being pumped through it. Now, it's incumbent upon us to safeguard that throughput, because that has does not have an institutional risk, but it has a far bigger risk than just one institution also. So together, between the CIO's office and myself, we are constantly thinking of how to safeguard all of these technologies, whether they're remote or phygital technologies, against the cyber risk. And finally, all of this throughput, all of these things are generating a lot of deposits, lots of deposits for us, especially in the high interest rate environment. If we can't use all of these techniques that I just talked about and come up with digital lending algorithms, I think we're not a bank. So with these thoughts, thank you for listening.
Thank you, Yaya, especially impressing upon digital lending towards the very end. Definitely food for thought. And the last few speakers talked about whole spectrum of different services, from being able to service the more urban, and when you talked about mobile financial services, the unbanked as well. Ladies and gentlemen, I'm now going to invite two very seasoned industry colleagues, Mr. Faisal Anwar, the CEO of MCB, and Mr. Tabish Sabah, the CEO of Touchpoint, for a fireside chat. And the topic for this particular chat is data analytics and APIs creating a competitive edge. Mr. Faisal and Mr. Tabish, over to you, sir.
Assalamu alaikum, everyone. I think the mode is that, it has been desired that myself and Faisal will do some catwalk so that you can see how we walk and while we talk also. So I think there's interesting conversations that took place in the last couple of hours. Habib talked about individualism, so I will touch a little bit upon that. And then Yaya also talked a lot about the deposit side, and in the end, he covers the lending, so I will touch upon that as well. But before we get into these conversations, we have all been hearing about this fact that data is oil, And what I'll try to cover today with Faisal, and I'll try to ask some deep questions also, as to what are some of the things that are really required in order to become a data-centric bank. What are some of the key challenges that he sees as a CIO and working with the industry over a long period of time in order to overcome that. There is this interesting thought that I read, that in order to become a data-centric organization, you don't need chief executive officers, you need chief destructive officers. So we need to discuss a little about that as well, that what kind of context that it brings to us to do data lending and using the data as well. So Faisal, to start the conversation first, what are the key challenges that you see in building a data-centric organization? And we need to walk. Yeah.
So to start with, I think the biggest challenge is to have the catwalk done, because I've never done that in the past. So I think you set the stage by saying that you also have to do the catwalk, so I need to learn that art. I've not done that part as yet. You touched upon two basic fundamental things. I think, one is a bit of a sensitive area that you touched upon is being bank having a CEO versus a CDO. I won't call it destructive officer, but yet a CDO. I think the way I would put the first part of the question contextually is, yes, we have seen a disruption. You may narrate it as a destruction, but you need somebody there, also as a messiah, to make sure to set the course in the right direction. Because you don't want to go as far as that you won't be able to recover from that. So I would leave the CEO in its place as a CEO. But yes, destruction to an extent contextually where somebody could actually go and challenge the mindset. Because it's not about technology. It's about culturally going and touching the core of an organization and retraining the minds that it is a contextual change and a culture change. A lot of conversation that I had in the past with a lot of people around, when you talk to them about data, is primarily focused around adoption of technology. The way I've seen it, the way I've lived it, it is not about adoption of technology, that's a means to an end, but it is rather going and changing the culture of the organization. So I'm very used to it because I wake up early. That's one way of looking into things. But I also contextually see that, okay, every weekend till the time I used to live in Karachi, the place that I live and I miss, since I relocated to Lahore very recently. So I go to Dolmen Mall and I feel an ATM needs to be there because I go to Dolmen Mall. But that's a culture because I am now making decisions based on my experiences. These are not being enriched by taking an adoption of a data feed that we collect as institutions around us. So changing that mindset is the biggest hurdle, the biggest challenge. That's the second part of your question, that changing the culture and adoption is the most difficult part, to leave your comfort zone and go back to something which is very model-based. While you're doing that, before I hand it over to you, I would like to emphasize upon a very sensitive part of this, which is that yes, we build models, and we do build very good models. Some would do a catwalk, the one just like I'm trying to do. That was supposed to be a joke, just in case. So that's how we crack a technocratic joke, right? So one needs to understand this, that while we are building those models, the models needs to be governed in an environment that they don't become biased. Because at the end of the day, once the logic is pre-built into a machine, it is being done by an individual, by a human. And human has some science to things. That's how the neurals are being wired up in our mind. So that needs to be governed in such a way that we make the model and then we govern the model and then we train the model that it treats everybody with equality. And that's how I would relink it again back to where we started off, that is a cultural shift.
Interesting point, Faisal, about Dolmen. And I think, this AI, it's been there probably since ages, right? It's just that the definition has come. And you talked about, individuality. And I remember that, most of us like to go to the same barber every time we go for a haircut. It's just got to do with relationship. It's got to do with individualism because he knows more about me. I feel comfortable in talking to him. I feel more relaxed when I am around, despite the fact that there may be some very good barbers around, but my go-to barber would always be that. Similarly, this is exactly how we do our transactions as well. And there's this all cliche about people buy from people. So individualism, in order to do one-to-one, it's easy. But when you have so many customers, you need a lot of data. And we'll discuss upon data quality a little bit, but I want to touch upon this AI since you talked about it. Things have changed big time. We have always been taught to find answers, to learn answers, For the first time, the paradigm has changed where answers are available. How do we find those mindsets to find the right question? My 10-year-old kid, he knows how to use ChatGPT now. So for him, finding answers are not difficult at all. He would just type in and get an answer. So how do you see that change? Do you see the critical thinking that is there in the upcoming generation will be there? What are some of the challenges that we see with regards to answers being readily available?
So it's a very interesting conversation, and being a technologist, I think it's the most difficult way to answer it, because there is a very fine silver lining that lies on this bridge. While it has helped me to increase my productivity, contrary to that, it has also restricted my imagination, my thought process. The concept of growth mindset and mind being evolved over a period of time is how much you have challenged something, right? So you drive a car, you drive a very fancy car, I know that. So, the car needs to be tuned and then connected with the driver to make sure that it can perform on the road the way the driver wants to perform it. So ChatGPT and tools that would bring in the answers to what we are looking for, yes, it in a way would help me to be more productive because I have limited time hours in the day. But at the same time, it has stopped me challenging my own mind, my own exploratory domain of my mind, which I would say that, again, kind of linked to the topic that I touched upon earlier about governance, that you need to make sure that you only use those technologies till the time you do not let that creativity die within you. If you are a value contributor to that technology, then nothing like it. So, for example, these tools like GPT and all of that, they do have contributors domain also. So if you are a user plus a contributor, it's a completely different thing. But if you have found this as a shortcut to please your boss, then I would say no. Then something is wrong fundamentally somewhere. And then experiential learning is something that is also, that needs to be part embedded into the individual, because that also helps to make you a bit more creative. Otherwise, it becomes a very stagnant. Yes, you may have a very good presentation to present, very good numbers to present, but will it resonate with your personality? That is a question that needs to be answered, that whatever you do should be able to connect with you as a person. So yes, at some point in time, might be AI will take over, but I would say personalization should remain there, and contribution should always be there.
And I think, another important thing leading from what you said about presentations and PowerPoints, and I was recently reading an article about Amazon. In Amazon, I don't know how many of you know, PowerPoint is banned. You are not supposed to use PowerPoint at all in any of the discussion. Any meeting needs to be properly drafted, shared it in advance, and the whole objective is of Jeff was that, when you do a PowerPoint presentation, the focus is on the optics rather than on the content. So you mesmerize people with those beautiful decks of McKinsey's and all of that rather than the content. And hence, it was very, very surprising. And I think, that's where it is important on what you talk about critical thinking. That I think these are some of the measures that organizations like Amazon's are taking for people to start thinking instead of being generative. The other question, Faisal, there is a challenge of resources, right? And I think we all know that there is a very, very high demand of tech resources across Pakistan and more importantly, outside of Pakistan. When you try to implement such technologies, you give them a bed, for them to play, to experiment, give them kind of an innovation of failure kind of a motivation, and then after some time you realize that, the resources are gone. How do you see that, as an industry, we should try and address this challenge also?
So one of the things that I would actually contextually present or share as my own personal experience, number one, you need to become a bit more fearless. So one thing that has over a period of time has taken over is a fear, should I let go or should I not let it go? What will the boss think? If it fails, what will happen? And that kind of indirectly takes away the creativity and the horizon, the addressable horizon away. So I don't want to do something because it may fail. I feel challenged when I open up because somebody is going to come and cross-examine me. So that kind of creates a void and the bridge is not fully built. At the same time, yes, there will be movement of skills, but the bridges needs to be built. And I think another thing which is very close to my heart as a responsible corporates, the social responsibility is to also connect the industry with academia. So my experience, right or wrong, at least so far has been successful. Ideally, a research and innovation should happen in academia. It's a bit of a controversy, so I have to be optically correct. So the way world sees it, that an entity which is built to make or produce numbers would always have one view to, or one angle or approach towards things, is that how my numbers look like, how this initiative will affect or impact my bottom line and the top line, and will it have a draw, drag, or whatever. Completely contrast to that is the academia is built right opposite to the far stretch, right? There's no drag of financials. It is only an exploratory ground, so as if you can see it and if you can explore it. So the innovation needs to go away. I'm not saying to take it out completely unless you're an R&D firm, but you take it to somewhat extent to academia. But when you go to academia, there's another problem at large that we end up doing. We go to academia, we say we want to solve this problem, but we want to control this problem. So you've ring-fenced it again. So that means the bubble of fear is still very much there. And what is the fear? So we do not delegate, right? If I went to academia, I should narrate my problem statement and let somebody come back with a solution. It may be 5 solutions, it may be 10 solutions, or it may be none. But end of the day, you have the right to choose the right solution for you. But the day when you go there and you say, no, okay, I am going to get this done, and you're going to write it like this, and the outcome should look like this. That creates the void again between the academia and the industry because the egos kick in. When the egos kick in, the problem that you end up creating that you do not nurture the talent. You are in a position where you are telling, you are not developing. And this is something that needs to change between our own ecosystem, that we need to start developing this talent rather than just giving a direction. That there are times when I've seen, because this socially, and I personally connected to academia and quite extensively, I've been visiting faculty also, so I used to interact with industry also. They would get down to this, write a program like this. But why? If you disagree, if you have a problem of an IP, handle it at a later stage. If you are a genius and you're going to the academia, break the problem in such a way into multiple pieces that your IP can still be secured, and then stitch it back together when you bring it back to your own company. But innovate. that will inculcate the culture of nurturing the talent. And that is the only way to success. Otherwise, we will always be the run of the mill, and we will not be able to maintain this talent over a period of time. And the brain drain will continue because some intelligent person somewhere in the globe would actually create a cross-border program and pick up these kids. That's what we've been seeing.
And since we have a couple of minutes, and I do want to touch about one use case particular is about digital lending. You know, with AI and now it's much more accessible, I would say. Do we see this happening, especially for SMEs? You know, I think for consumers, it's still possible. You know, considering the way the business is going. But I think for SMEs and for commercial lending, how do you see that aspect developing into future? Because frankly, the kind of documentation that is required is just a nightmare in order to get a lending product from any financial institution for a commercial or an SME environment.
So कहते हैं उस्तादों की मौजूदगी में उनसे इजाज़त लेके जवाब देना चाहिए तो नदीम साहब अगर आपकी इजाज़त हो तो I happen to be have this privilege of being part of a working group when the DRB framework was in the process. So I was the industrial representative as part of that process. So my value add and the contribution, the question that I asked that we're doing all of this, but are we also setting up an auxiliary infrastructure around it, and which leads to question of setting up the credit bureaus so that the underwriting process can also be digitized, because the micro lending is also about being able to profile the individuals to a larger extent. And unfortunately, the development of credit bureaus in the country, the growth is not as exponential as it should have been. It would have eased up the process far more and far better if we had a couple of credit bureaus and be able to connect with them and profile an individual. And then there is a part to play, naturally, with the full disclosure that it is not my field or subject expertise, something to do with the lawmaking also. That a serious uptake needs to happen wherever this part of financing is being done successfully. The favorite, or not, I rather not use the word favorite, but favorable laws needs to be in place for companies, banking or non-banking companies, to be able to put their foot forward and then do into this SME or the micro or nano loans, as you may call them.
With this, thank you so much, Faisal, for your time. I think I'll just sum it up, what the conversation has been around. Data is future, right? And we need to start embarking, if not already, our journey onto it. We need to build an organization which is data-centric. And I personally think that organization need to think about hiring chief data officer as well as a role in the organization, because of the sanctity of the data, governance of the data, quality of the data. Because there's this old cliche, garbage in, garbage out, right? I mean, AI would clean, but if it's wrong, I mean, it will take even AI magic to fix it, right? So the fundamentals of any business will remain the same. I think the optimization, which is much more faster, the ability to solve problems will be much faster. I mean, just to tell you, I challenged my team also to develop a program using an AI engine, no coding, and compared to a manual work, it was almost a 70% reduction in time. So it is there, right? It's just that we need to embrace it. We need to be very open about it and ready to embark upon this love of data as a future for us. With this, thank you very much, Faisal, for your time.
Thank you. Yeah. So I couldn't do much, and I couldn't do a catwalk as you stated, but I managed to convince you from a chief destructive officer to chief digital officer, data officer position in the organization, which I think in the future times companies must look at it seriously. The time is about to come that there has to be a position at a CXO level to be a chief data officer in an organization. Thank you very much, and pleasure to be here.
Thank you, gentlemen. It was heartening to hear about traditional banks taking on digital lending. If banks across sub-Saharan Africa can embrace digital lending in leaps and bounds, and surely all of us can put our heads together and figure it out as well. And I guess we were referring to Chief Disruption Officer. Our next speaker, most of us would agree, requires no introduction. You'd agree when I call out his name, Mr. Nadeem Hussain, a coach at Planet 10 in Rakami Bank. I welcome you on stage, sir, and deliver your keynote. Welcome.
Assalamu alaikum, Khawatine wa Hazrat. I'm going to take about 20 minutes just sharing my thoughts with you on what the topic is, the future of banking. I must thank Faisal once again. Actually, I've been associated with this conference now for close to, I think, 21 years. Probably done most of his keynotes. So, future of banking is about disruption, and I'm going to disrupt the audience because I think we are walking the talk. We're not talking the talk as far as a lot of the stuff that's been spoken about today. And so मैं आपको ज़रा ज़मीनी हक़ाइक़ से वाकिफ़ करना चाहता हूँ और मुझे पता है आप already वाकिफ़ हैं and I'm just going to reinforce it. Some observations and some of the conversations that has happened has passed because I think a lot of the stuff we're talking about is happening globally, but we need to take the unique Pakistan context before we start examining these solutions, and over a period of time, I'm sure we will embrace them. We're a cash society, 8.9 trillion rupees printed and in circulation. Now close to 28% money in circulation, one of the highest in the world. So when you have a cash society, how do you do digital? It's not easy. So we talked about behavior change, but it's not easy. So keep that in mind when you talk about, and actually, I will talk about because we just received a digital bank license with no branches, so I'll have to talk about the need for branches and a business model with no branches. Why did branches go up in Pakistan, 2,000 additional branches? My forecast is in Pakistan, branches will keep increasing very simply because it's a very simple business model. If you noticed, one of the first presented showed profits of Pakistani banks going up by 47%, abnormal increase. That's not coming from customer lending. The total lending, the number of individual customers that the entire commercial bank industry has is 1.1 million individual lenders. So, this money where is it? Obviously, it goes into PIBs and TBs. It's a great model. You open a branch, you get deposits, you provide customer service, but you get deposits, and you lend to the government on a risk-free basis with no capital allocation. You have a huge spread, and every year you'll make more money. It's a great model. That's why branches are not going to go away. People are going to experiment. They might have new form of branches, but it's my forecast. Every year, commercial banks will continue to open more branches to try and get that huge 8.9 trillion cash out there into the branch so they can lend to the government. So that's point number one as we're talking about the future of branches in Pakistan. Very much here to stay. The second point was just on the last conversation. Bhaiya, there are 5 million people who are currently being giving money on algorithm basis by just two banks, okay? Which is Telenor Microfinance Bank and Mobilink Microfinance Bank. Out of the 8.5 million micro lenders, 5 million are nano lenders. So this is not something futuristic. That happened 4 years ago. We've been using predictive algorithms, using GSM data and smartphone data, and nothing else, no salary, no utility bill payment, nothing, instant credit. So we're already up to 5 million people. Unfortunately, there was a plethora of unlicensed lenders who started lending at exorbitant rates, and the SECP has just come up with a regulation capping the amount that you can lend, as well as capping the interest rate. And the State Bank also has a circular right now which is looking to cap the annual profit, because when you charge 50, 60%, it becomes usury. So predictive lending has been around for 4 to 5 years. 5 million people already exist. Now that's the most basic of predictive lending, which is using GSM data and smartphone data. But no predictive lending models have so far been developed, although I'm sure they're in the works, for SME lending or supply chain lending where there is enough data on the order taking of the particular retailer or distributor. The third point I wanted to make was ATMs. Why would I want ATMs? We have 180,000 branchless banking agents which are open 7/24, which are available across the breadth of the country. We don't require electronic, power, to be there at all times. So ATMs are good, but very expensive proposition. The bulk of your population lives in rural areas, and if you want to service them, you're going to require something, not branches, but a branchless banking model, which is what we have. And the digital banks are going to be needing this more and more because they're not going to have a physical presence. So, I can have a different view that the fact that we have 17,000 ATMs is not bad news for me. The fact that we have 180,000 branchless agents, and we can take it up to 200,000, 250,000, for me would be a more ideal model for what Pakistan is, as opposed to put another million ATM machines over there. Cash deposit machines are a separate matter. I did a survey recently on LinkedIn, and I asked the people, and bulk of my followers, and I have 50,000 on LinkedIn, are actually bankers. And I asked, how long on an average does it take a bank to open an account for a private limited company? Now, range of answers, I said 7 days, 15 days, 15 to 30 days. Even though the bulk of my following is bankers, the answer I got was 15 to 30 days is the average time it takes a bank to open an account for a private limited company. Now, I know some banks do it in 3 days, some do it in 5 days. If you talk to any banks, we do it in 3 days, but I don't know who these people are who are responding. 1 month, 15 to 30 days to open a private limited company account. I'm not talking about individuals. Individuals we do in 1 minute. We started doing that 14 years ago. Level 0 account based on an SMS star 786 hash and your CNIC number and your account's open. I'm talking about private limited companies or AOPs. I asked, how long does it take a bank to provide credit to a new-to-industry customer? Not a repeat customer, not somebody you have data on, but a new-to-industry customer, and the answer was in excess of 30 days. Now, that's where the opportunity in my mind is, and I think banks have the best advantage to actually do that, but they haven't done it as yet. Which is why, in my view, why did the State Bank come up with 5 new licenses, retail digital bank licenses, when there are 34 commercial banks, 8 Sharia compliance banks, and 6 microfinance banks? It's not that we don't have enough banks. So in my view, again, the State Bank can better give, my view was 3 reasons. The first was the customer journey. The customer journey, if it takes you 30 days to open a bank account, or if it takes you in excess of 30 days to get credit if you're new to the industry, is about back office automation and use of AI in your predictive algorithm, using existing data to forecast what a new to industry customer will do. So one reason in my view was, will digital banks be able to change the customer journey? The advantage a digital bank has, it has no legacy system. Now, if you talk to any CIO or CTO and you tell them, we're going to automate the back office, it's a huge, huge challenge having a legacy system to automate. If you're starting from scratch, it's a much easier proposition. So I think the digital bank have an edge over there if they can construct their tech architecture from day one so that there is no paper, there is no manual process. Then you materially change the back-end customer journey where the drag is. Everybody's come up with a great sexy app up front, but it's only when you get to the back end, you get 30 days to provide service to the customer, which in this day and age should not be the case. The second edge a digital bank may have is, again, creation of customer personas. Now, again, as I say, existing commercial banks are way ahead theoretically on the amount of data they have on existing customers. But is it actually being used the way it ought to be? And I suspect it's not. If a digital bank starts, they have zero data to start with. As they accumulate data, and if they create that data lake that we're thinking of we're contemplating doing, then I think it's going to give us an edge in the customer journey and the persona of the customer, knowing what to sell, when to provide the next offer. Now, unlike a commercial bank, which is making tons of money right now because of the way they've created the business strategy, I don't begrudge them that. A digital bank will only make money in Pakistan if it lends. There is no money in the payment system as it stands right now. With under 25,000 free on IBFT, on RAST, it's very difficult to make money if you're a payment provider. You need to lend. If you're going to lend, then you need to have that efficiency. How will a digital bank, in future, compete with a resident, strong, branded, low cost of funding commercial bank? It's going to be very tough. It's not easy. License mil gaya, but it's not going to be easy. People think, digital bank will move the needle. It's going to take them 3 to 5 years to get their act together. Agreed that the architecture is such that I think they will have a material change in customer journey. They will have risk appetite that commercial banks don't have because, unfortunately, commercial bank PIBs और T-bill के नशे में हैं इस वक्त और रहेंगे क्योंकि that need of the government to raise money is not going to go away because of this tax imbalance. But challenge क्या आएगा? I mean, we talked about this earlier. What is the bigger challenge? The bigger challenge is, if I'm talking about opening a company account in a day, in fact, in hours, so I need to figure out my account opening documentation for SME can't be 15 pages, it has to be 1 page. The signature has to be digital. I have to materially change the construct on what we have right now. If I have a loan document, it can't be 10 pages with 20 signatures. It has to be 1 page and digital signature. Unless a retail digital bank can do that, they're going to get eaten up by the commercial banks because, as I said, commercial bank have a strong brand, they have bricks and mortar presence, and they have they have no issue about cost of funds. One of the biggest challenges a digital bank, which typically, I think all 5, certainly Rakmi Bank is having no branches at all, 0 branches. I think most of the other digital banks may opt, because you're allowed to open 25 branches over a period of 2 years, is going to be deposits. How do you get deposits when you have no physical presence? Now, you could say one of the EMIs has got 1 million downloads and has deposits because it's providing great service and the customer interaction is great. So that is going to be one of the challenges. Second challenge is, since we have no branches, where is your cash in, cash out going to be? So a digital bank will be heavily reliant on partners and will need to have an open API structure. My own experience with most commercial banks, including my previous bank, is that if I want an integration, sometimes it takes 3 months to integrate. Standard integration can take 3 months. These are the inefficiencies that if we change, you'll be able to change the customer journey. So how am I going to use AI, or how can a retail digital bank use AI? I think there are 4 aspects. First one is not so much AI, it's RPA. How do you get rid of paper, and how do you have 0 manual process? Now, easily said than achieved. So when I'm going to be standing here next year, if I'm invited, I'll tell you whether we've been able to achieve that or not. Because if we can achieve that, huge, huge difference in customer journey. Second thing is the use of predictive algorithms. You've seen people do it. We are hoping to do it in the SME sector and the supply chain as well. BNPL, as I had earlier mentioned. I think all these pieces lend themselves to predictive modeling. The question is, do you have the risk appetite? And I think the digital banks, or at least some of them, will have the risk appetite because they're not planning to go into PIB and T-bills. So they need a return higher than PIB and T-bills because there's a risk involved in this. And they would need to lose some money in the process of getting the algorithm done. The third thing, obviously, is, and I think banks are starting to do this, but they're slow, is customer persona. Whoever has customer persona then understands the customer needs, and if his back office is automated, it's going to make a difference. So that's where, I think retail digital banks over the 5 years, in terms of lending, are going to have more customers than the 34 commercial banks. But where are they going to be in deposits as a percentage of what the banking industry is? Nowhere. I mean, they're just probably going to be able to just manage their own book. I'm talking about retail digital bank. Remember, the average ticket size is going to be under 1 lakh, maybe go up to 1 to 3 lakhs. Okay? Exceptional cases, although there's no limit like microfinance banks, but it's going to be tough. But it's going to be very exciting because if you want to move the needle in Pakistan, and we're talking about 1.1 million active loan customers by the banking industry, then supposedly there's a huge opportunity. 8.5 million customers for the microfinance bank, total customers about 11 million in a country of 220 million people. So I think it's going to be very exciting seeing some of the changes. The 5 digital banks have gone to the other extreme. No physical location at all, no smart branches, no branch, bank in a branch. They have to do everything remotely, and one of the biggest challenge, again, as mentioned by earlier speakers, is going to be the behavior change. My sense is, if you provide credit, you change behavior. If you don't provide credit, you expect people, because you have a very efficient app to change their behavior, it's going to be slow and it might even be unlikely. Credit is the glue. If you can provide credit based on whatever data you're getting, if you're willing to take the risk, if you're willing to lose money, then I think you have an opportunity to move the needle in Pakistan as far as lending is concerned. As far as accounts are concerned, I told you, we have 55 million accounts, but people forget 85% of these accounts are on feature phone using USSD, they're not using an app. This is where the bulk of the people who actually have mobile accounts are currently using. So while we talk about apps and digitization, don't forget the feature phone and the USSD channel, which is the bulk of the mobile wallets right now. So folks, I'm going to end saying that I think despite the very challenging environment, this is exciting time because the opportunity of getting not only the unbanked, but the underbanked and the underserved is huge. Remember, most digital banks globally don't make money till year 7, year 5. Some of them are still not making money. But they do have one thing, which is valuation. Okay? So they don't make money, but they can get great valuations. And I think some of the charm in getting this license, other than, making impact at the bottom of the pyramid, was valuation. Thank you very much.
Well said, sir. Credit lubricates adoption. Next, we have Mr. Shahzad Isaaq, the Group Head Digital Banking and Chief Digital Officer at MCB Bank. Sir, I would request you to please come on stage and enlighten the audience with your thoughts. Mr. Shahzad Isaac, are you
I'm just coming.
here? So, I was getting cues from the back.
Thank you very much, Faisal Rahim, for this opportunity. What a privilege and pleasure to be in front of this audience. I'm both bewitched and bewildered because Nadeem hired me back in the day in 2001, so speaking after him seems to be a tall order. So, sir, with your permission, if I can, I remember circa 2001 Citibank days when you approved my hiring. So what a pleasure to be here. Since this morning, you've heard a lot about what the future shape of banks would be and how the market would evolve and how the industry is evolving. When I conceptualized that I have to speak to all of you, I was thinking, why don't I tell you my journey? I'm not a very accomplished chief digital officer, although years of predictive modeling in Central and Eastern Europe, I think had prepared me a little bit to do what I was supposed to do. So I'll just tell you the story. The story will have a couple of phases. The phase one is making of a chief digital officer and how do we go about it and what does he do in an incumbent bank. I represent MCB Bank Pakistan, so I'll be talking about making of how we started our journey at MCB Bank and how we are scaling it up. And I also keep that thing in context always, what Bill Gates said in 1994. I think he wasn't that much tainted back then, but he said what he said. He said, banking is necessary, banks are not. So that stays with me, and it's a cause or a war for relevance that I actually struggle every day. So this was March 2020, 2021. And we were told that we've got to, COVID years and the change was coming, we were told that we've got to go full throttle on our digital transformation program. We had an extremely successful incumbent bank and one of the most profitable banks in the market, yet we had to embrace the new digital transformation. And that's when I was commissioned to lead the journey. And obviously, this market and some of the most accomplished CIOs and CDOs, Chief Digital Officers sitting here would know, they were much ahead of the curve compared to when we started the journey. And the first thing was to put a strategy of the future together. So the way we looked at it, with all respect to the valuation and the way our digital bank or digital banking is going to be set up, was not a valuation play. The way we operated, the way we thought we'll come out was more like build to last. You must have heard of Jim Collins' book. How do we build an enduring bank which continues, sustains its success over years? And we looked at 2030, we looked at 2035. And how we went about it was we explored how this market was evolving, who was doing what in the market. Then we spoke extensively to banks across the world who had started the digital drive much earlier. When I spoke to Paul Coban, who was then the Chief Transformation Officer of DBS Bank, and I asked him, what is your biggest regret on driving DBS's transformation? And he said, my regret is that we would have tested more things than we actually did. So as you go out to make something, please test more things and don't be afraid, step out. We were also told that in DBS Bank's transformation, the first step was reducing the branch teller wait time from 11 minutes to 9 minutes. And they did it between him and Payush Gupta in 2 years. They reduced it from 11 to 9 minutes in 2011. And that meant they saved 300 hours of customer interaction. And that was the first time he said that our colleagues and our bank got convinced that transformation has a value and that we can drive it forward. So I'm just narrating some of the learning points that went into when we were putting that strategy together. Yahya Khan touched upon very sequentially some of the things, starting from the digital app onwards to whether it's BNPL or using artificial intelligence or robotic process automation, all those variables. It was a band of 9, 10 people. We all worked on it together. And it was a doing of 9 months that we put together who we were to become in the future and how do we deliver a build to last organization. My learnings from that is not everything goes right. The process is rather chaotic. It's cumbersome. It takes a lot of time. And yes, it takes some crazy people to put it all together. But you have to stay with it. And we've lightly touched upon, my colleague Faisal Anwar talked about it, the culture. Culture is the code. It's the defining element on what you would be able to accomplish or how you would be able to accomplish. So the CEO is the key, the senior leadership team is the key, but with their sponsorship, we could all put it all together, and in the end, we had a strategy that looked into the future. Now, this was the first stage of our own transformation journey. And as I told you, it kept resonating with me that how do we keep this bank contextual, relevant, and seamless to the future. It just doesn't happen because you're thinking that it will happen. I'm just reminded of Desmond Tutu's saying, an elephant can be eaten one bite at a time. If you try to eat the whole of it, it becomes overwhelming. So we've been since doing it one by one. I'm happy to report that this month, in less than 2 years, about 22 months, the app that we run gained 1 million customers on it. We aim to get 3 times the size in next 2 years. And the throughput volume exceeded 100 billion rupees a month. So, we did at least this piece right. And then we are heading to a scale that takes us into future. Now, yesterday I also listened to a talk by one of the forthcoming digital bank's CEO, and I think he made a lot of sense when he said that it would be a shift of the banking will be able to serve everybody. That's for sure given that relevance will remain the key. Nadeem Saab talked about having the right customer personas, whether it's segmentation of the market or it's the customer personas. I think the forthcoming digital banks will have an agility advantage. But then the buildings, the brick and mortar, the trust, your ability to walk inside a building, that will also stay relevant. On one side would be agility and speed. On the other side would be the trust that people have in decades-old institutions. So I would also argue that it would not be one against the other. It rather would be a complementary play of the future. Now, that said, we will have to continuously evolve. And, this saying is famously attributed to Charles Darwin, which says that in my study of history of species, I've seen it's not the strongest of species that survives, it's the most adaptable species that survives. So I think we'll have to continuously work together to deliver a more collaborative, more shared world where we will continue to have a war for relevance, a war for purpose, and then it's all out together. So with this, I will just sum up my thoughts that what I've learned, and by the way, it's a journey in progress. So don't expect, very forward-looking or, innovative kind of thinking, but it's a real journey, and we are on it. And I welcome all of you to stay on this journey, and we'll all evolve together. So with this, thank you very much.
Ladies and gentlemen, a guest at the back, sir, could I please have your attention, because we're now going to hand out some special awards. Should we proceed? Okay. So we now have two special awards, and to announce these, the categories for these awards, I would like to invite Mr. Naveed Ali Beg, CEO of Innovative Private Limited, to come on stage, please. May I also invite our guest of honor, Qazi Shoaib Ahmed Saab, Director, Payment Systems Policy and Oversight at the State Bank.
And Faisal also.
Yes, I'm just calling out his name. Welcome, sir. And of course, I would like to request Mr. Faisal Rahim, CEO of Total Communications, to please join us on the stage. Over to you, sir.
Just to encourage banks.
So, Oscars time. So we have two awards going out today. The first of them is going to a bank which is known for its digital innovations. And you heard the chief digital officer of that bank today, talking about some of the innovations that they've been carrying out. They were awarded the best digital bank by PBA in 2022 and the Pakistan Digi Award for Alpha Mall in 2023. And they have opened up the first fully digital branch in Karachi during this year. The award goes to Bank Al-Falah. I would invite Yahya Khan and Mr. Mohib Hassan Khan on the stage to receive the award. Do we actually have an award? Oh, yes. Fantastic. Sir, if you could. Please. Congratulations. Yeah. A very well-deserved award. Congratulations. Thank you very much. A very well-deserved award. And the second award goes to the highest deployer of ATMs during the past 12 months. Now, this bank, in 2022, initiated a project of deploying 1,100 ATMs in one go, which was, the highest quantity of ATMs by any bank in the history of Pakistan. And they were not only successful in procuring those 1,100 ATMs, although the times were difficult for shipments and production delays, but they were able to overcome, together with the vendors, of course, all the hurdles, and eventually all the 1,100 ATMs have already been deployed in record time. The award goes to MCB Bank Limited. I would like to invite Mr. Shahzad and Mr. Faisal Anwar over to receive the award. Shahzad Isaaq Saab. Congratulations, Ji. Congratulations.
I just have to say a word.
Please, please.
Before we accept this award, let me tell you this belongs to our customers. It doesn't belong to us. It's their trust, it's their commitment, it's their relationship, it's their vintage with us, which makes us do these great things. We've just started the journey, we've started late, but this actually belongs to MCB customers. So on their behalf, we are accepting this award.
Well said. Please.
Congratulations. Thank you very much. Thank you, gentlemen.
Very well deserved. Thank you very much.
Well said.
So you can make the next announcement. Thank you very much.
No, please.
Qazi Saab, I would now like to invite you for your key address, please.
Ladies and gentlemen, Assalamu alaikum. First, I would like to say that it's my pleasure to be part of this prestigious opening ceremony. And I would like to congratulate Total Communication for organizing this wonderful event on Future Banking Conference and Exhibition. At the outset, I would also like to congratulate, though I have already congratulated Bank Al-Falah and MCB, but at this podium, I would like to congratulate them again for their achievements. SBP has been part of this forum since this forum has started, I believe, for the last 2 decades. The organizers are basically organizing this annual event. This is one of the very well recognized forum where all the industry participants come here and exchange their knowledge, as we are seeing since the morning, and express their opinion on the future landscape of banking and technology sector. Our team from State Bank is here. We are just keen to, get useful input from what the panelists and participants are to say in this conference. And I'd like to assure all of you that, we'll try to evaluate all these feedback and try to incorporate in the policy making. As you are all aware that State Bank is a central bank with certain policy functions, I will quickly give you an overview of that and how these policy functions are evolving in the recent years and how these policy functions are basically, policy objectives are basically related with what is being discussed in this forum. So traditionally, central banks have 2 policy objectives of price stability and financial stability. But over the recent years, State Bank has also been contributing to a few other policy objectives, which include financial inclusion, digital financial services, Islamic banking, and more recently, environmental and social governance. Well, so this is, these are a number of policy objectives. There exists some potential synergies amongst these policy objectives, but at the same time, there are certain trade-offs between these objectives. So we basically try to follow a proportional regulatory approach where we try to minimize the risk for industry and consumer, but at the same time, try to ensure that innovations are not stifled. So that's the approach basically being pursued by State Bank. Now coming to the topic of the conference, which is future banking, would like to let you know, and most of the participants here already know that State Bank issued a national payment system strategy in 2019. That is the key document for us, on the basis of which we have been taking, various policy and market interventions. As Nadeem Saab mentioned a while ago, that cash continues to dominate in our economy, despite the efforts from central bank and despite, a lot of initiatives being taken by our banks. Despite this all journey, the cash in circulation is increasing with a rapid pace. And the use of electronic payments in our economy remains severely limited. So for State Bank, in terms of enabling the payment ecosystems, we are basically working broadly on 3 areas. So one is legal and regulatory framework. which is our core, role. The second is providing providing help to the industry in building payment acceptance infrastructure. I will talk about that later on. And finally, we are focusing directly on the payments. And when I talk of payments, I include retail payments, government payments, and remittances. So beside all these three policy goals, State Bank has also been working on the use of new technologies. So where are the opportunities? What are the risks? So most of the work is basically on the exploring the new technologies, working with the industry in terms of how they are using these new technologies, and identifying risk and try to develop mechanism to mitigate those risks. So this is our approach towards new technologies. Now coming back to enabling regulations, I would just like to highlight a few areas. So last week, State Bank issued in principle approval to 5 digital banks. So, I'm sure that all of them are here participating in this conference. So this is a big step in our digital journey at the country level. Second, I think second important piece for State Bank, which we believe will contribute to the development of Fintech in Pakistan and towards the financial inclusion, is like EMIs. So in 2019, State Bank issued regulations and licensing framework for EMIs. So that basically paved the way for non-banking models to become a part of the industry and contribute towards the payment services and to provide value to the customers. So far, we have 4 EMIs which have full commercial operations, but then there are a number of EMIs which are at the pilot stage. So we hope that we hope to see the addition of further EMIs in the sector. Thirdly, in terms of regulation, I would like to highlight State Bank's initiative of issuing a framework for remote onboarding of customers. Again, Nadeem Sahab talked about that, how it facilitated the onboarding of customers and account opening. So customers' experience in terms of opening of account has been streamlined. So these were a few initiatives, big initiatives. Besides that, State Bank issued framework for outsourcing to cloud service providers, giving space to the banks in terms of managing their storage capacity, creating the option of cloud with efficiency. Besides that, different circulars on mobile security services, SOPs for cybersecurity incidents reporting, and RDA initiatives that were taken by State Bank. Now, another goal, as I mentioned, is helping the industry to build payment acceptance infrastructure. Towards that goal, State Bank, with the help of industry, established an instant payment system in Pakistan, namely RAST. 2 use cases of RAST have already been, operationalized, P2P and bulk transfers. I'm glad to share with the forum that the third use case, which is P2M, has also been deployed since September 3rd, a couple of weeks back. And I'm glad to share with you that 6 banks have already been onboarded on P2M. So P2M is, we believe, will be a game changer in terms of adoption of RAST at the industry level. I would like to mention the name of 6 banks, which are Al-Falah, MCB, Allied Bank, JS Bank, EasyPesa, and OneLink. So these were the 6 entities. State Bank has been making follow-up with other banks to be part of this P2M journey, and few of those banks are in the pilot stage. But the remaining, I would urge with those banks, and we are already, in follow-up with those banks individually. But those who are present here would urge that, you also work with our team to be part of this P2M use case. We had a wonderful beginning of the RAS. If we compare it with the IPS of a few other countries, the initial adoption of RAS has been wonderful. So far, more than 32 million account holders have been registered with RAS, and 225 million transactions have been through RAS platform, amounting to more than rupees 4.6 trillion. So we believe that RAS is a big addition to our payment acceptance infrastructure. Besides RAS, SBP last year also issued a standard on interoperable QR code. So this QR code has been part of P2P use case of RAS and is also part of P2M use case of RAS. So we believe that this is the way forward, and QR payment will be a game changer, and it will be a most useful utility for the unbanked population. On the side of payments, government remittances and retail payments, SBP has taken initiatives which include use of alternative delivery channel for government tax collection. Besides that, certain government entities, which are the larger one, like AGPR and CDNS, and few others are also in pipeline, they have also become part of RAS platform. So their bulk transfer, their use cases of salaries and pensions and vendor payments are being routed through RAS. So these are few action items that State Bank has been pursuing on directly promoting the payments. Now, let me talk about a few initiatives that State Bank believes in terms of future outlook are important. So, State Bank has been working on new technologies which include artificial intelligence and blockchain, machine learning, big data, regulatory sandbox. So, in terms of use of artificial intelligence, we believe that its strongest use case is on preventing the digital fraud. So we are working on two initiatives. One is in-house, and another is we are working with an international vendor. So we are basically developing a model for predicting the frauds. And we plan to, once this model is developed, we plan to embed this model on the RAS platform. So that will certainly be quite helpful in terms of protecting the customers of RAS from the potential frauds. Similarly, talking of open banking initiatives, State Bank firmly believes that banks will have a large role to play in terms of sharing, in terms of leveraging their customer data through open banking and open APIs. And there is a great opportunity in the industry where banks and fintechs can create collaborative partnerships, win-win partnerships, and develop customer-centric products and promote the role of digital financial services. Another area of new technology is obviously use of blockchain, and its use in terms of developing CBDC. So globally, there has been quite an interest on CBDC. State Bank has been quite keen on learning the lessons from other central banks, and State Bank is in touch with IFIs such as World Bank and IMF and other few IFIs. And we are trying to understand the different dimensions of CBDC. So we are treading this path quite cautiously. So, State Bank has also taken industry's consultation, has been, taking an industry's consultation on this front especially. So that's, how State Bank is approaching CBDCs. In the end, I just would like to highlight that when it comes to new technologies, State Bank is collaborating with the local industry and with the global players. And we are trying to promote the opportunities coming through these new technologies. But at the same time, State Bank is also evaluating what kind of regulatory response should be built to ensure that related risks are also minimized. I would like to reiterate SBP's commitment for enabling its regulatory environment in line with these innovations and development. And I wish for the productive and fruitful discussion at this forum. And we look forward to the ideas and suggestions that the panelists and participants will be offering today. Thank you so much.
Thank you, sir. We request you to stay a few minutes on the stage as I was going to request Mr. Faisal to join as well. Ladies and gentlemen, before we break for tea, we are going to take a few minutes and present a few mementos to recognize our sponsors and key speakers. I think we can get started. I'd request Mr. Naveed Ali Beg and Mr. Habib Hanat from Innovative India Bold to please come on stage, sir, gentlemen. Can we have a round of applause, please? It seems very... For the title sponsorship, in recognition of 21 years, my sincerest apologies, actually. I should have started with the outreach partner, Mr. Zoeb Khan Chairman Pasha. Sir. Okay. Apologies, sir. Thank you, sir. Over to the platinum sponsors from TPS. Could I please have Mr. Shahzad Shahid on the stage? He's not inside the hall? Can anybody from TPS please accept the memento on behalf of Shahzad Saab? Okay, moving on. Ms. Rida Mansoor from Bank Al-Falah. We have to be a little bit more generous with our applause, please. Thank you. Thank you. Mr. Nasir Akhtar from Infotech, please. Mr. Altan Ahmed from Euronet, the gold sponsor. My apologies for mispronouncing, but Mr. Aftab from Fashion or Fatian. Round of applause, please. Thank you. Fatian, I'm so sorry. Mr. Aftab from Fatian. Thanks, Aftab. Mr. Farooq Beg from BPC. Farooq, do we have you in the room? Mr. Arshad Alam from WaveTech. Waqas Mirza from Avanza Group, please.
Thank you so much. He's here all the way from Dubai.
From Secure Networks, Arid Salim. Mr. Arid Salim. Round of applause, please. Mr. Reach is the Cybersecurity session partner for this event, ladies and gentlemen. Moving on to the silver sponsors from Urban Tech, Mr. Abdul Qadir. Do we have Mr. Abdul Qadir in the room, please? From Comtel, Mr. Ashraf Faisal. Do we have Mr. Ashraf Faisal from Comtel here? Mr. Mohammad Ashraf from Ryan Co. Do we have you in the room, sir? Oh, we see you. Okay. Ms. Sadia Samat from Autosoft Dynamics, please. We see you. Round of applause, please, ladies and gentlemen. From Proxima AI, Mr. Adnan Zaidi. Mr. Adnan Zaidi, do we have you in the room? From ISSM, Mr. Ehsan Mashkoor. Mr. Zain from Integrated Payment Services, a final silver sponsor. Okay. The lunch sponsors is Mr. Tabish Taba from Touchpoint, sir. Thank you. And our tea sponsors, eOceans. Is Mr. Amir Jafri or Mr. Asif Jafri, any of the Jafris in the room? I've been asked to announce proxy. Thank you, sir. I've been asked to invite Mr. Adnan Zaidi from Proxima AI. Is he here now? Welcome. Just a few more before we break for tea. The speakers of the morning session, Mr. Zoaib Khan, Chairman Pasha. He just left. Mr. Nasir Akhtar, Chairman CEO of Infotech Group, sir. I think he's also. Mr. Naveed Ali Beg, CEO, Innovative Private Limited, sir. Okay. And Mr. Habib Hana, can we have you? Mr. Habib, can we have you on stage again? He's sitting. Speaker of the morning session. It's quite the presentation, sir. I think Mr. Yahya Khan, Chief Digital Officer, Al-Falah, I think he's left. Can we ask? Okay. Can we? Oh, he's right here, sir. Okay. Round of applause, sir. Mr. Faisal Anwar, Chief Information Officer, MCB. Guys, we really enjoyed his fireside chat. Let's show some appreciation. Mr. Tabish Taba, CEO, Touchpoint. And I think Mr. He's right here, sir. Mr. Nadeem Hussain, he's left. Mr. Shahzad Asaq, Group Head and Chief Digital Officer of MCB Bank. Faisal Saab, it seems a little bit much, but the master of ceremony for today's event, Usman Anwar. And Faisal Saab, I would like to please present a memento to our guest of honor, Mr. Qazi Shoaib Ahmed, the Director, Payment Systems Policy and Oversight at the State Bank. I'm going to invite everyone to join us for tea. We will be breaking for about 25 minutes. And this tea is, let me reminding everyone, has been sponsored by eOceans, and we'll meet again in 25 minutes. Please join us for tea.
two. Hello, hello, test. Hello, hello, testing, check, one, two, test. Hello, hello, test, check, one, two, test. Hello, hello, testing, one, two, test. Hello, testing, okay. Hello, testing, check, one, two, test. Hello, testing, check, one, two, test. Hello, hello. फारूक भाई होंगे हेलो टेस्टिंग चेक वन टू टेस्ट हेलो चाबी लेके घूम रहा हूँ हेलो हेलो टेस्ट हेलो टेस्टिंग चेक वन टू टेस्ट हेलो 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 टेस्ट वन टू टेस्ट
Ladies and gentlemen, please return to the Xavier Hall. We are about to begin our next session. So welcome back, ladies and gentlemen. We are starting our post-tea session with a very exciting panel discussion. Can I please request everybody to be seated? So this session is titled Unlocking Next-Gen Engagement in Digital Banking. And I'm going to request Mr. Shahzad Shahid, Group CEO, TPS Worldwide, to take charge as moderator. I'm going to ask you to take charge and kindly invite the worthy panelists. Sorry?
Assalamu alaikum. It's generally a tough session when you have it right before the lunch or right after the lunch because people are generally away for the snacks or the lunch, whatever. But I think it's going to be an interesting session because we have some panelists with us, which actually are real practitioners, and they have been into this financial sector, digital area of it for many, many years. And they are actually in their own organizations, they have been playing very strategic role, which is eventually shaping up the national digital financial situation that we see today. I am glad to have with me Yahya Khan from Bank Al-Falah. Yahya, if you can please come over. We'll keep the introduction later on so we can save time. Aminur Rahman from Faisal Bank. तालियां कम है ज़रा वैसे. Thank you. Sharik Mubin, Mizan Bank. Khurram Mumtaz Mashrik, Neo Bank. Usman Dastagir, Food Panda. And Farrukh Ali Beg, BBC. So first thing first, guys, I have been given a message that the 45 minutes of activity has to be compressed to 35 minutes. With 6 amazing panelists with me, I think it's going to be, and me as well, right? So it's going to be a bit of a big ask to compress things, but let's try to make it as much interesting as we possibly can. So the topic is unlocking the potential with digital, which becomes relevant to the future. So if I start right away with first introduction, 30 seconds each. ये सब आपसे start करते हैं, who you are, what is the role, and whatever, right? So try to make it fast.
Yahya Khan, Chief Digital Officer, Bank Al-Falah, and I'm responsible for all digitization in the bank.
Bismillahirrahmanirrahim. Aminur Rahman, I'm the Chief Digital Officer of Faisal Bank, leading the digital initiatives for FBL.
Ji, Assalamualaikum. My name is Sharik Mubin, Chief Digital Officer at Mizan Bank.
Assalamualaikum everyone. Khurram Mumtaz. I am the head for Neo, Mashrik Digital Bank, and I look after individual clients.
Assalamualaikum. Usman Dastagir. I'm head of Fintech at Food Panda, and my primary role is about facilitating payments and anything to do with financial use cases in Food Panda.
Assalamualaikum everyone. Farrukh Ali Beg, I'm the Managing Director for BPC Banking Technologies in Pakistan.
Excellent. So let's start with, I'm sure we don't need to go into the word of what is digital banking, how is it relevant to the country. I think we have listened to the great experts early in the day, so we don't need to get into that again. Let's straight away get into questions to establish or understand how the next few years are going to be transformational in nature in terms of digital engagement of our masses. So let's first talk about mobile apps, right? The simplest or the most prevalent method of the digital engagement today. And there's a lot of talk about the language. As a country, we have got a very low literacy rate, especially if you talk about literacy in terms of English speaking and English understanding. And yet our mobile apps
almost in all cases, barring couple of them, are in English language. So, if I may ask Khurram Saab, Mashrik, I mean, in your experience, because you have been CDO of Standard Chartered Bank earlier, you have worked with Citibank as well in the past, you know, you are in a digital bank. Do we really need to have a regional language support in the mobile app, or do you think that English language with the graphic elements are good enough for the mass adoption across country?
Yeah, thank you, Shazad. So I think you have touched upon the very right topic to start off. Next generation of digital, right? So if you look at the literacy rate of Pakistan today, we are still hovering around 58%. So that's one aspect why I think there is a need to further change our language from English to maybe bilingual or Urdu language, which most of the banks are doing at the moment. But at the same time, digital banking is all about convenience, right? Let's take an example of if you have to message someone, right? So rather than typing a message, the most convenient way for you is to just send a voice note, and the vice versa. You would like to hear the voice messages more as compared to typing a message on the WhatsApp. So keeping on that in mind, I think there is a need for sure, not only to convert our English language mobile apps into Urdu, but at the same time, I would recommend, and in fact, we are working towards it, to take a little step ahead and go into the regional languages. For example, voice-assisted account onboardings in local languages, for example, Sindhi, Saraiki, Pashto, Punjabi. So I think that's the need of the hour, because one of the reasons we have been talking about the financial inclusion in Pakistan still hovering around 27, 28%. So maybe one of the reasons is that people are not really comfortable using the mobile apps, typing onboarding requirements and servicing needs. So definitely there's a need. And definitely I think if we, as banks and as a future banking industry, we need to convert these mobile apps more into local languages for our customers to understand and to get into financial net. That's my view.
So basically your thing is that the banks should, and the fintech should invest time and resources into making their engagement layer more regional and more contextual compared to more head office driven base. I think this is what the helm of it. Nadeem साहब ने सुबह एक बात की कि digital lending is the only way to make money, in the digital banks. Do you think it is as easy to say and execute and be successful to actually make money and not continue to bleed? And as a banker yourself, do you see that digital lending is the only way for the digital financial institution to be successful in terms of making money and also be profitable?
Yeah, excellent question. Again, one thing that nobody talks about is digital lending is not for faint-hearted. So when you start digital lending, in your first few cohorts, you can see losses going up to 30, 40%. Now, in any boardroom, forget about commercial banks boardroom, in any boardroom, absorbing a loss of the capital deployed up to 30, 40% is not going to be taken lightly. So first of all, for any digital lending practitioner, they have to prepare their investors to say कि यार शुरू के मेरे 3-4 cohort which can last for up to a year, I can go into and run into up to 30 to 40% losses के ऊपर until I train my model. Pakistan में दूसरा issue ये है कि the structured data or the availability of the structured data is not significant. So अभी तक जितने भी digital lending के scorecards बने हैं वो ज़्यादातर unstructured data के ऊपर अपने आप को बनाने की कोशिश कर रहे हैं, because banks generally are the custodians of the structured data, and because of the data privacy they've not been sharing it. I do feel that if a bank seriously makes an attempt into making a digital lending algorithm, a proper digital lending algorithm, they have a far greater chance of succeeding than non-banking players, simply because of the availability of the structured data. The other thing is the cost of capital on which you are raising it. So if you're using a private equity money or your capital money, is a very expensive way of disposing that. and then what is the kind of APR you may be charging. And the higher the APR, the more the losses. Higher the interest rate, even higher the APR, the higher the losses. So it also really depends on, and Nadeem touched upon it in his conversation, that it'll be very hard, but I think we look forward to a fantastic competition. But it'll be hard for a newcomer who has not been a commercial bank to raise deposits at a cost which lends itself well to lending. Right? So if, for example, for commercial banks, their cost of raising deposits is 6%, right? When you put CASA together. For a microfinance bank, that cost is 12%, 13%. That's why there is the differential in spread between when a microfinance bank lends and when a commercial bank lends. And then when a microfinance bank lends, their admin cost of underwriting a loan is also very manual. So you add that also. So maybe it's not even 12%, it's 15-16%. So 16% to aapki cost of deposit hi hai, and then everything else comes on top of it. So that's why you end up charging up to 40% for a microfinance, even higher in the current environment. Now, as you're saying, is when the non-banking players come, they have to see what is their cost of deposit. There is a cost of experimentation, which is fine, right? So the board would allocate $500 million or $1 billion or $2 billion rupees, and the board would say, "Chair, isse tum experimentation kar lo." And okay, I'm willing to write off up to 30-40%. Agar 40% losses hain, the write-off may be 20% of it. So wo kehte hain, chalo main 20% write-off karne ke liye taiyar hu. But what happens subsequent to that, subsequent to the 2 billion that is run out? So the answer to your question is, I think there are lots of considerations. I feel, not because I work for one, I've also worked for non-bank in the past, I feel banks have this comparative advantage. The issue with banks is different. Banks, as Nadeem also said, banks are used to taking easy money now, right? They're making easy money either through deposits and very small portion of it out of lending. But if anyone who has more chances of succeeding in digital lending because of the availability of the structured data and the availability of low cost of deposits are banks.
I think, well, not too convinced. The reason is there is no data sharing, right? So somebody may have a transactional account with Mizan Bank, applies for a loan with Bank Al-Falah. It may be a new customer to Bank Al-Falah. How will the data be shared across the banks? How will the data be shared between the non-banking entities like Food Panda and the banks? Because a lot of trends come from there as well. I think there's a lot of elements to the credit scoring, but what's really been talked about, Yahya, and I'm sure you will have some say on that as well, some view on that as well. I mean, there are people who don't just want to pay back. So is there any recourse which is available to a regulated entity like a commercial bank or even a digital bank to have the money back, or a situation where the person is forced to think that the money they borrow is the money they have to pay back? You think the environment is conducive to Pakistan, or is there anything that you want to be done ASAP for these DRBs and the banks which are getting into digital lending, they'll be successful?
Wow,
I mean, I'm not talking about the high interest rate, right? That's another element. I'm saying that that's only transitory, right?
Yeah.
It will go over. But the regulatory environment I'm talking about.
A super question, and both of them are loaded questions. So look, the regulatory environment is one, but then you must also have a supportive legal environment, right? So a regulatory environment, okay, regulates the bank and the consumer through a contract. Who's going to enforce that contract in the case of a default? Foreclosure laws aapke hai nahi, right? Try evicting somebody from their house and there will be a stay, right? So the financial institutions or their rights are not sufficiently protected like Freddie and Fannie Mae jo banai gayi thi aur bahar ke mulkon mein. So not only they provide a regulatory infrastructure, they also provide the legal support. That's when the lending really takes off. So it's an excellent question from that. So no, there are no foreclosure laws. There is no easy legal infrastructure for the recourse. So literally, when we are designing products, we are actually thinking, अच्छा ये करेंगे, इसके बाद ये पहली effort digital होगी, फिर उसके बाद human based telephone पर होगी, फिर उसके बाद अगर loan amount इतने से बड़ा है तो चलो recovery officer चला जाएगा, उसके बाद अच्छा यार चलो write off है, right? And then everybody does that like that. And everybody thinks like अच्छा यार अगर मेरा ticket size जो है ना वो X amount से नीचे का है तो मैं खाली डिजिटल पे करके यानी नैनो है राइट ऑफ कर दूंगा, वाई है तो चलो मैं एक पर्सनल कॉल करवा दूंगा, जेड है तो चलो मैं रिकवरी ऑफिसर भेज दूंगा और उसके बाद मैं बंद कर दूंगा. देयर इज़ नॉट अ सिंगल प्रोडक्ट इंजीनियर सिटिंग हेयर. आई कैन गारंटी यू ऑल ऑफ दीज आर माशाल्लाह सुपर प्रोडक्ट इंजीनियर्स हु थिंक अबाउट कि अच्छा मैं कोर्ट में ले जाऊंगा और मेरे जो है ना वो लॉज मुझे प्रोटेक्ट करेंगे और मुझे पैसा वापस दिला देंगे. नॉट अ सिंगल.
So basically, I think what you're talking about is there is for sure a massive market size for lending, a nano or bit higher the size, but there has to be the right environment where the money that you borrow, you feel obliged to pay back, and there is a legal recourse available for the lender. So you may get hit in the first few years, but then you know there is an upside to it eventually, right? Thank you, Yahya, for this excellent answers. And inside, Amin Saab, mashallah, you have evolved massively in your own sort of area. You're among various things that you are looking at, you're also looking at the customer engagement channels, which are digital in nature. It also involves call center and other things, right? So I always think that call centers are not the most efficient of the channels, yet we use them because we are so comfortable with human conversations, right? They are intelligent, they are patient, they listen to my question, English में, Urdu में, किसी भी regional language के अंदर, and they can answer me to whatever extent. That said, it's a cost because I have to make a phone call. It's a long waiting time at times, जिसमें call connect नहीं हो रही होती है, and then the person at the other end may not have the answer to you, right? And they may say जब आप email कर दें इसके ऊपर या मैं बताऊँगा आपको मैं. And then we see a lot of efforts towards AI, ML, generative AI, मतलब क्या-क्या नहीं हो रहा दुनिया के अंदर, and we keep talking about that. आज भी बहुत बातें हुई हैं. हमारे chatbot intelligent नहीं हो सकते कि I can really start talking to them like I start to, I mean like we've got virtual assistants, right? Siri हमारे पास सबके फ़ोन में है ना, ये सब चीज़ें रखी हुई हैं. तो ये हमारी इतनी ईज़ जो है मेरी मोबाइल ऐप पे क्यों नहीं आ जाती कि मैं उससे बोलूँ कि यार मेरी ये pay my bill, tell me the balance, या ये मेरे पास क्रेडिट आना था आ गया कि नहीं आ गया. मैं 3 क्लिक करूँगा, ऐप में जाऊँगा, ट्रांजैक्शन इंक्वायरी में जाऊँगा, मिलेगा नहीं मिलेगा, right? I mean, do you see that in the next few years, the chatbots from the bank sides or the fintechs are going to be intelligent enough that they can have a conversation with a customer?
Thank you, Shazad. A very interesting question in terms of the evolution of the customer service, because if you look at it from a different context, the context of customer servicing, so the contact centers or the call centers, whichever way we put it, are a necessary evil in this day and age. Uske bagair, I mean, none of the banks can survive because the customers need to come into contact. You don't want them walking into the branches. But at the same point in time, we must realize that the evolution or that next phase is already here. So I'll give you a personal example. Rather than getting into theory, I'd rather talk about how we're actually dealing with it, taking the bulls by the horn at Faisal Bank. So what we did about a year back, हमने का experiment करते हैं with WhatsApp banking. So WhatsApp banking, traditionally, banks think that's just another channel that we should or we shouldn't experiment with. But as of now, I mean, like jumping the conversation, getting right down to the point. So as of now, if our call center is, catering to volume X, so the WhatsApp banking is catering to an X plus Y volume. So the volume coming onto WhatsApp banking in terms of self-service is now greater than the contact center volume. And this is what we've built in the past 1 year. But of course, this is not the end result. The point of arrival is that WhatsApp is, why WhatsApp rather? Because, there's a theory that you have to meet the customer where they want you to meet. What traditionally banks have been doing is that we make our own platforms, we make our own solutions, then we push it across to the customer कि हमने app बना लिया या हमने solution बना लिया, अब आप इसको download करें. What is the customer using? In this day and age, the customer is more inclined towards the social media channels. WhatsApp banking, everybody out here in this entire audience, 100% has got WhatsApp penetration. So you want to meet the customer where they want to meet you. So likewise, you spoke about chatbots, etc. So even globally, Shazad, the study is that 1 in 5 banks, even globally, they have chatbots or bots, whichever way that we want to look at them. So, and even out of that 1 in 5, उसमें से सिर्फ handful ऐसे entities हैं, banks हैं, जो कि जिनके पास intelligent digital assistant, आपने Siri, Alexa की आपने बात करी, etc. So, banks are struggling a bit in that space. So, getting to the point, conversational AI or intelligent chatbots, that is the way forward. Chatbot, I mean, these are kind of buzzwords which we always throw around. We get to hear them a lot. Like, what is the chatbot? So, chatbot actually mimics a human conversation, right? जिसको हम intelligent chatbot की बात, generative chatbots की बात कर रहे होते हैं. But conversational AI is, powering that chatbot now, which gives you that human touch. So it's all about getting that human touch. के बजाय कि आप call center call करें for that agent-based assisted mode, you interact with the computer, which gives you that same feeling as a, as a human element. So this is where the industry is moving towards. Definitely banks over here in Pakistan also need to experiment. And I think the panelists over here, I think it's a very esteemed panel. And I'm sure that most of them must be thinking about experimenting in that area. One bank for sure, which is Faisal Bank, is definitely moving towards that direction.
Excellent. So do you think that in some time in the future, there'll be some virtual assistant sitting on the phone, maybe from Android or Apple or from some other producer, which will over APIs connect with all the apps within the phone? Because the phones are now cluttered with the apps. There are like 100 apps on the phone, right? You don't know the passwords, you don't know how to log in, keeping secure, there are a lot of transactions. So why can't we use either Siri, Alexa, or possibly a virtual assistant that can internally integrate with all the apps and just make it easy for you to do the conversation maybe in your Urdu language, Punjabi, English, Russian, whatever, right? So do you see that this is something that we should expect happening in the next 5 to 10 years? Or do you think that still it'd be owned by the banks and the fintechs, or it will be really opened up?
I think nothing is impossible, and I think this question or this answer actually delves into the space of even blockchain for that matter. So blockchain is one technology which actually will make this possible, that the ownership or that, that fraud prevention, which currently is one of the biggest challenges in the financial sector. So if you decentralize the ownership or decentralize the data or the secrecy or the, the sanctity of the customer data, this is a concept which you mentioned can absolutely be possible, where let's say there could be a, some super solution which overrides all other independent banking solutions, or, where then instead the customer has to deal with maybe 10 apps or maybe 10 independent solutions, there could be one overarching solution. So I think definitely in the near future, maybe in the next 5, 10 years, this will absolutely become a possibility.
Sharik Saab, so Mizan Bank, mashallah, has been super successful. I mean, if you keep looking at the results that you guys shared about the success and the profit, I think the growth is phenomenal. Phenomenal growth, right? And Mizan Bank has now ventured into the acquiring side as well, POS acquiring and e-commerce. And what I got to know through reliable sources, that you guys are among those acquirers which have the highest revenue per merchant per POS. So congratulations for that. Now, in terms of acquiring, right, let's talk about digital side to it, which is QR acquiring. All I know about QR acquiring is कि जब मुझे मिलेगा ₹1 का burger तो मैं QR acquiring use कर लूँगा. I mean, there have been a lot of marketing campaigns, a lot of efforts, but I have not really seen, I mean, forget about becoming mainstream. I have not even seen is somebody using it. We don't even see the QR code on the merchant anymore. What is your view of QR acquiring? Is it something that's going to give a comeback, become mainstream, or is it not for our Pakistan country?
Ji, Shehzad, thank you for the question and nice introduction of Mizan Bank. So, देखिए QR, of course, it can become mainstream. The missing pieces really are, number one, interoperability, which was not there, but now with P2M coming in on Rust, so it's going to solve that puzzle. So that's one thing. Number two, it's all about user experience. And we've tried different models on the user experience, but the one that is really going to work is going to be the one which is really fast and that works at all times. You see, we have seen different models in China and India, and then we can come up with our own, but it has to be owned up by banks, and it will only happen when banks take it as a commercial product and pursue this domain and then make it one of the mainstream products in its product line. That, of course, will give you a lot of penetration into the third-tier market, where currently we cannot deploy POS because of its feasibility, both to the customer and to the bank. So I do see this thing taking off from here, because the right environmental support is now available. And also, banks are now willing to put in, some investment into this thing, because earlier, the requirement was also because of a lot of tax concerns and a lot of documentation concerns. We couldn't really penetrate deeper into the market because of those concerns. But now those things are becoming mainstream. So merchants are not very shy of documenting their transactions, and it is sort of improving. So this is the right time when we can go and target the third-tier merchants with QR, with the right experience, both on the issuing side and acquiring side, and using the right technology. I think we can do it.
So what I gather from your answer is, it is for the second or third tier merchants, primarily focus for this. Second is, it's about the user experience for both merchant as well as the customer. And third is the payment rail that you believe that RAST P2M is going to solve. But I mean, will P2M be a revenue generating sort of rail, or it may restrict, just like IBFT or P2P?
So you see, the good part is that unlike IBFT, when RAST was introduced, it was priced at zero by regulation. And obviously, banks did look at it as one of the avenues for the revenue leakage. And there was some resistance in the beginning, but then obviously it had its own advantages because of the because of the user experience, which is where you can only put in your phone number and still be able to transmit money. So that was one part of it, but otherwise, in terms of commercials, it was not a very solid proposition on part of the banks. But P2M, State Bank has thankfully not decided to regulate this price. So if I can offer a better product, I can charge some price, and then somebody else can beat me on price and service, but then it's going to be a market play. So if I have a good product, I can make it a commercially viable product. And similarly, if it's my own strategy to go out and offer it for free in the beginning, maybe in the first 2 years to capture the market, that is my own strategy, own plan. But the good part is that it is not regulated, and hence we can come up with our own models to make it successful.
I think this is very wise of the regulator, because eventually the last mile is where a lot of investment has to go into. And without the money made because of the service, it's not going to really see the consistent investment going into it. Excellent. Usman Dastagir Sahab, you are not a banker. Well, have been in the past, but so you're representing Foodpanda today. Foodpanda is among one of the top, I believe, e-retailers or whatever you call them, right? And a lot of transactions happen digitally there. So what is the ratio of, prepay versus cash on delivery today? And whatever the ratio is, in your sort of capacity as an organization, how you see the shift going to happen in the next few years? And is going to be supporting the digital mode of payment, or you believe the cash is going to stay as a king for Foodpanda?
So thank you for being. So thank you for having me here. I think cash will not be the king for companies like Foodpanda or Daraz, right? Which eventually has a smartphone involved somewhere in the ordering process, which means that the customer has reasonable access to technology and language and everything, right? And there's a good chance, thanks to branchless banking players, that somebody who is 18 or even not 18 has an access to a payment instrument. For us, giving the answer for the first question, we are 45% prepaid, which is an astounding number.
25%?
45.
45%.
Yeah, and growing. And we have been able to do this because at the end of the day, COD for many, many customers, and in a business like food, is actually a right to refusal, right? I don't see that our customers, many times, by the way, our customers are 6-year-old, 8-year-olds asking their parents to pay for the food. But in many, many cases, it's just not the issue of access to a payment instrument. It's the fear of having a bad customer experience. We have been able to mitigate that quite a lot, so we're growing. But I think in general, e-commerce still suffers in both the prepayment area and the post-payment UX, right? God forbid, money is deducted from your cards and the order is not placed. I don't know how many days it takes, but maybe I'm wrong, but I think the mandated dates are 45 days, if I'm not wrong, right? Maybe somebody can correct me, but at least a week or 10 days are expected. In a quick commerce business, that's not sustainable. Similarly, on the post-UX side, customers are, all of us at some point of time have been at that place where the order was not that great. So I don't see cash as an access problem for at least a large app ecosystems. I see it more of a UX problem. How do we give people the trust that, and sometimes it's not the job of the primary merchant to do that trust. There are many different companies who end up ensuring that trust at many parts of the value chain, which allows users to give money for prepaid. That, all right, it's okay. I can, even if something happens to my order or my merchandise, I'll be sorted out. I will not have to wait for days to get sorted out, right? So I think we are moving towards that sort of area, and for us at least, we should be able to be 50-50, balance of GMV by the end of the year. But the key is UX.
Okay, excellent. So, Farooq, BPC has customers in multiple regions, right? In the neighboring country as well as in Africa and other countries, which, I mean, we can draw parallel between Pakistan and certain countries. So in your experience, which are the use cases that you guys think you have delivered in some other part of the world, but they have not really been properly implemented in Pakistan, and if they have done, Pakistan can actually benefit from the digital penetration or inclusion. Any such one example that comes to your mind that why we don't have it done in Pakistan?
Thank you, Shahzad. So if you talk about the Pakistan economy from a holistic perspective, I see that the traditional digital economy is now moving towards a disruptive digital economy in Pakistan. That's what I would love to say. There are multiple segments to it where we are ahead of the our neighboring countries. But there are some segments, specifically if you talk about transportation, digitization of transportation. I see that a red line, blue line, orange lines are being launched up and coming up with a digital card acceptance to some extent, but they're primarily closed loop cards or proprietary cards, you can say. Why don't we have a machine that can accept any kind of bank card on a bus for any kind of customer that is onboarding to have that to avail the services, you can say. So that is one of the use case that I see that it has a huge potential in the Pakistani market by digitizing that transportation piece. Having said that, the agricultural segmentation, you can say, or the supply chain sector of our country. Pakistan being the the agriculture country, having 20% in the GDP as our agricultural share, you can see that that segment is still primarily focused on cash-based transactions rather than digitization of the entire supply chain. We have done similar kind of projects in the neighboring countries there, as well, where the central bank or the regulator has involved along with the big commercial banks of the country, and they set up an ecosystem for digitizing the entire agri-tech marketplace altogether. The success rates are really good. The adoption is really good, and at the same time, as my colleague from Mashik Bank was saying, that it should come up in multilingual applications and ease of access to the end customer, so that a farmer who has a mobile but he doesn't know more about English, he can easily access it through his own native language and can get into the digitization space quickly and easily. Beside these two use cases, I see that the digital app concept is now booming up towards super apps. Banks have been able to launch multiple mobile applications for different segments of their customers. Could it be their retail or merchant applications? But why don't a single application could be launched where the user login credentials actually determine what kind of functionalities and features needs to be shown to that specific customers. We have implemented, few such kind of super apps even on the shared switch on country level, where the member banks were actually, all the member banks having white label mobile application, using a same mobile application with their own branding, and only their login credentials and their selection of bank actually determines that what feature set and what kind of functionality needs to be shown there. So I think these 3 or 4 of the sectors are still a bit of missing here, but I see that if we work, in establishing ecosystems rather than on individual basis in the next 5 to 6 years, we could have, a better growth in that segment also.
Thank you, Farooq. Just last question before we have one question from the esteemed guest, and that can be taken up by any one of you. So I'm sure, my kid, and I'm sure your kids as well, they play online games. So they practically are aware of the virtual world where they spend virtual currency. This is what we're calling as Metaverse, and the banking in Metaverse. So these kids, 10 years later, will be the ones which actually will be earning money and dealing with the bank, the customers of the bank in the next 10 years. So are the banks today gearing up towards setting themselves up in the meta world, which will be familiar to this generation 10 years later? Anybody of you can take this question. Khurram?
I'll try. Yeah. So yeah, spot on. So if you talk about any teenagers today, majority of their time they spend is around gaming, right? And when you talk about gaming, is all about metaverse and metagaming. If you talk about Facebook, slowly and gradually you will notice that Facebook is also shelving, and they are actually moving towards another phase, which they are launching very soon, and it's going to be meta logins. So likewise, today you have your Insta IDs, your Facebook IDs. Tomorrow you will have your Meta IDs, where you will log in as a user. So digitization, linked with Meta and Web 3.0, I think it's all about experience, what we're talking about here. You buy online versus you go to a shop and you experience something, to physically see that thing which you're purchasing is all about experience. I think with Meta coming into banking, it's going to be the 3rd or 4th generation we're talking about. If you look at the whole journey, we started with conventional banking where customers used to go to branches for cash withdrawals to move to a stage where they had to withdraw from ATM and now funds transfer. This is actually the next generation we're talking about, where customers we don't have to really go out, experience branches maybe. I sort of disagree with the thought that branches is going to be something which cannot replace digital. I think in future, you talk about our generations, our kids, maybe tomorrow they don't need to go to branches because they are so used to of living in this world that meta banking, I think, is going to be the solution which can crack digital in Pakistan. That's my view is. And I think we should rapidly evolve towards meta banking.
No, I think that theoretically it makes total sense because, it's said that Pakistanis spend over $500 million plus a year on gaming. The gaming spend is in excess of $500 million. So this is a massive, unregulated, largely undocumented transactions. I think banks really need to sort of look at it very carefully, cautiously, but this is something. In the interest of time, because we have been given 35 minutes only, we are reached the end of the thing, but I would request if you can take one at least question from the esteemed guests that we have, that any of our panelists can answer. If you can have one question from anybody of you. Yeah, so there is one. Yeah, do we have?
Take the mic there.
Hello. Somebody there?
Somebody needs
who
to
can,
take
yeah.
the mic over there.
Yeah, hand over the mic. So please keep the question short and to the point.
I'll keep it very, very short. Asma Shabazz here from Mashriq Bank. So it's encouraging to see that we are talking about, we've gathered here and talking about digital and a digital banking future. Do you think we have the right sort of support from the basic stakeholders, right? So the government, the legislature. Do you guys feel that we have the right sort of support? Thank you.
So I'm sure anybody of you can take this question. Yahya, you want to take the question?
I think we have sufficient level of support.
So she expects a candid answer.
I am giving a candid answer.
She is a banker herself, right?
Yeah, yeah. No, I think we do. In fact, I had used a more neutral word, sufficient. In fact, we have better than sufficient level of support. I have worked in other markets where the regulatory support certainly is not half as much. But I do defer to my earlier point about not having the legal infrastructure support. I think there has to be laws put in into the legal infrastructure. But I think from the regulatory support point of view, yes. Those are the main stakeholders. Then your investors is another ball game. They still value banks as banks. They don't value banks as digital banks. So the sort of multiples that are put on banks are not reflective of the digitization.
Thank you, Yahya, Amin, Sharik, Khurram, Usman. Farooq, it was a pleasure speaking to you. The time was short. We had some amazing topics that we could not cover today. I want to talk about CBDC, I want to talk about embedded finance, open banking, but also the soft POS and whatever. But I think we had to respect the time that you had been given. Thank you so very much for being with us and sharing your insight with us. Thank you. Assalamu alaikum.
Thank you, Shahzad, and the panelists for this amazing session. Next, we have a presentation on reasons for banks to shift their services towards a digitized content experience. And to deliver the same, I'm going to request the team from WaveTech NCR, Mr. Raheel Malik, VP Strategy and Business Development, Mr. Sami J. Nasser, Sales Area Lead at NCR WaveTech, and Mr. Hashim Mehman, Country Manager NCR. Please come on stage.
Assalamu alaikum ji. My name is Raheel Malik and I'm the VP Banking Solutions at WaveTech. So we have a great story to tell. We started off in late 80s. We started this technology company more than 30 years ago. Young engineers, innovators started the company. We started with the satellite business and then transformed the business to a customer experience solution company. We have been global leaders now, and we have offices in 10 countries, and we are present in 75 countries, exporting our solution to 75 countries through our distribution network. In 2015, we started our self-service kiosk business with a big telco company who was looking to transform their branches to self-service kiosk solutions. We started working from them, moving their transactions from branch to the kiosk, self-service kiosk. And we figured out that there is a big gap in the banking industry. So we developed a CDM. Thank you, Bank Al-Falah, for giving us a chance to prove the concept. And if I go back to 2018, there was only 50 machines, cash deposit machines installed in the market. And there was a concept कि यार ये नहीं होगा, ये नहीं हो सकता. You know, cash deposit Pakistan में नहीं हो सकती. And we changed the whole, the paradigm. We actually make it happen. And all this was done indigenously in Pakistan through Pakistani engineers. Alhamdulillah, from 50 to now we have more than 400 machines in Pakistan. We are getting deposits of more than $1 billion per day on this network. And to, all these machines, as I mentioned, that are indigenously developed, these machines are manufactured. We have a state-of-art facility in Kurangi Creek Industrial Park. We invite all the bankers and, the Fintechs to visit us. This is our dream to make it a made in Pakistan solution, a complete hardware and software made in Pakistan solution. And inshallah, we are doing and we'll take it to the next level. When we are talking about taking it to the next level, we have signed up with NCR, which is the global leader in self-service kiosk solution. And they are global leaders in multi-vendor software. And we have a lot of upcoming projects that we are working with NCR, and we'll soon, inshallah, present it to our customers in local and international market. Now I'll ask Mr. Hashim to join us here to tell about more about NCR solutions and our relationship. Thank you.
Thank you, Rahil. Okay, so we at NCR basically, we pride ourselves in delivering quality and innovation. And we have been doing this in Pakistan for the past 65 plus years. So whether it's about, deploying the first ATM in the country, or introducing the first digital branch, or even introducing the first biometric-enabled ATM, we have done it all. We are also the first ones who set up a managed services center for managing the ATM networks for the banks. And though we are known in the market as ATM providers, but we are very proud of the fact that, our payment processing platform, Authentic, last year it processed around 2.8 billion transactions in one link, the interbank transactions that happened over there. And our Fractals, the fraud management platform, has been serving different banks through the platform on one link as well. And I think close to 2 billion transactions were processed through Fractals as well. With WaveTech, we are very excited about this, and we will continue, introducing new solutions and softwares with WaveTech to add to the innovation bit of it. And this partnership also underlines, our commitment to Pakistan and its banking industry. With this, I'll hand it over to Sami Nassar, who will talk about, how, our next generation ATM softwares can help the banks with an enhanced user experience and, provide a better ROI to the banks on the ATM channels. Thank you.
Hello. Thank you, Hashim. Thank you, everyone. Assalamu alaikum, everyone. I'm Sami Nassar from NCR. NCR is not new to the market. We've been in the market for 140 plus years. Provided multi-vendor ATM application and software, #1 in the market. We have over 1 million plus self-serve ATM orders since our launch. But today I will not talk about the history of NCR. I will move forward by talking about our software, specifically software that will enable the hardware and drive innovations and drive technology into the banking, drive more consumer experience, and most importantly, hand over the lockdown of services into the customer's hands. And this is what I will be talking about today and focusing on. As of today, ranking in the IDC Fintech 2022, we are number 4, and hopefully we are working on our ladder up. All that through our consumer experience strategic banking framework. It contains multiple solutions, integrated solutions, such as the branch transformation solution. It has been implemented across multiple banks in the region. And when I say the region, our region, Gulf, Pakistan, Egypt, etc. We have the self-serve reinvention. We have the enterprise and fraud security management implemented in Pakistan and other nearby countries. We have the channel management, customer engagement, transaction processing, and the digital banking. So how did we come up with the CX banking strategic framework? It came from our customers, not only banks, also their customers, the users of banks, customer of banks, etc. So before, if a customer wanted to open an account at any bank, they used to ask references, family and friends, where do you bank? But today, because the consumer experience has changed, new generation, we are more used to into technology. And I also echo what Habib Hanna presented regarding the travel experience that he faced. It was completely digital with zero human interaction. And this is the expectations of the new generation. Even like our generation, the new generation that's coming out, they are expecting our bank to provide the same services. But this is, I believe, it's a bit early, because in order to reach into that 100% digitalized service from A to Z, we need to start in phases. We need to start the engagement with banks in phases, because such implementation is a journey. We cannot go from day one 100% digital. Remove our branch with interactions with like humans, and let our customers to directly interact with machines. So it's a journey, and this is what we do at NCR. This is how we open up the discussion with customers, and this is how we study their infrastructure, their readiness, and the technology is there. The technology is available from NCR. It has been implemented in many banks across the region, live, up and running. But it depends on the bank's requirement, how they want it to start, and what is the end state goal. We have reached lots of end state goals within the region. For example, Bubiyan Bank, multiple 100% digital branches we implemented. Dubai Police, where they run all the governmental services through our technology, software and hardware, completely unmanned digital branches. We have, for example, Mashreq Bank, UMB in Qatar, Emirates National Bank of Dubai, many references. I will be happy to share those references and success studies. So this is the end state goal. Where NCR can reach with its technology is to enable your customer to use a single device that enables multiple interactions, whether a self-serve interaction. What does self-serve mean? Is a customer that walks into the ATM, conduct an entire transaction on their own, whether this transaction is cash withdrawal, simple transaction, cash deposit, onboarding, etc. So conducting transaction on their own without any support. The idea with NCR is to provide a single application that supports multiple models. So that is why we came up with the hardware that is completely configurable, in order not to allow the customer, which is the bank, to reinvest on something they invested on. The same hardware that you have today, or the hardware that you will acquire later on, is completely configurable, depends on the use case, depends on the service, depends on the functionality that you wanted to offer to your customer. You can add the cards to it, and the technology supports it under a single application. The single application depends on the service that you wanted to offer to customer. We will give you the component that sits on top in order to enable the different interaction models. For example, mobile pre-staging. Because as of today, if we look at the ATM or the self-serve, let's call it, infrastructure, it's isolated completely from the bank's IT. Anything you wanted to do on the ATM, it has to be developed. Time to market is lengthy. The cost is high. So what we did is we bridged the gap between digital and physical. We enable and we empower the bank to reuse the logic they have within their internal IT which as of today, like most of the discussions were like around digital banking, because like most customers, they prefer to introduce transaction digital banking. The technology allows it, it's much easier, much faster. But why don't we be able to reuse these technologies into the self-serve channel, enabling connection between the digital and physical, enabling the customer to pre-stage a transaction from mobile and do the fulfillment on the ATM, whether this service is the cash withdrawal, cash deposit functionality, or card printing, for example, checkbook printing, statement printing, etc. As I mentioned, we have done it all, many references across, but depends on the strategy of the bank. We take the loop, we take the road, and we start providing those services. And most importantly, with such migration, most importantly, first of all, is to enhance the user experience. First of all, and we take it in stages in order for the project to be successful for the bank in terms of lowering cost and increasing revenues, and also for the customers, because as I mentioned earlier, we cannot push our customers away from branches, physical branches, into 100% digital branch. It will be a shock for the culture. So we do it gradually. And not only that, we want the customer to have the power to implement those services, to have the power to control the ATM machine, to control the services on the ATM machine, and to control the development of services. So what we do is we provide the right tools to the customer. We provide the certification program that enables you as a bank to use your internal resources and personnel in order to control these services. Because at the end of the day, the ATM will remain, it's not used only for cash and dash services. Hello? Can you hear me? Sorry. For cash and dash services, we can use it as a fulfillment channel. And most importantly is to generate revenue for the bank, because we do not want it to be an additional cost center for the bank. So that is why we start gradually providing the services. As the bank sees improvement on the ATM channel and on the self-serve channel, we keep on adding services as we go. As I mentioned earlier, repeating it again, we give the power to the bank to conduct these services into the channel. So most of all, turn the ATM into revenue generation channel, because we don't want it to be a cost channel anymore. We want to reduce cost. We want to increase productivity. Time to market is much faster, and also provide gradual services that will be used by customers, because we need to educate our customers how to use the service, how to use the technology. Providing a customer, as of today, a mobile phone with a mobile application and telling them you are enabled to pre-stage services from digital and do the fulfillment on the physical, it's going to be a bit confusing. Maybe the majority of customers will be like a bit confusing, and they prefer the face-to-face interaction because they feel safer. But gradually migrating these services into the self-serve in order to reach the end state goal, which some banks like in the region, Bubiyan, Mashriq, etc., reach to have like a complete digital channel, is a journey that will take some time, and you need to choose the right partner for it. So we are very confident. We have multiple implementations, live implementation, multiple use cases in our region. If you get the chance to visit like some of our nearby countries, we can show you the different implementations that we conducted. We can provide a business impact model and ROI study, because it's very important for the bank to implement a technology that will be profitable for the bank. Lower cost, increased revenue. We're happy to provide any demos, POCs, integrated POCs even, and we are happy if we'd like to communicate with the reference to see how the journey started with NCR and where we have reached. So we're here, let's connect. Thank you very much for your time.
Thank you, gentlemen. I'm not allowed to have biases, but the next session for a fireside chat is a subject very close to my heart. It's fintechs from disruptors to enablers. And I'm going to invite two very prominent voices in the financial services industry, Mr. Nadeem Sheikh, founder and managing partner of Neem, and Mr. Waqas Anis, Chief Digital Officer, JS Bank. Welcome, gentlemen. Let's be more generous with our applause, please. Thank you.
on.
Assalamu alaikum. Can you hear me? Can you hear me? Hello? Can you hear me? Way in the back. Can you hear me there? Good. Excellent. So, create a questions, right, about fintech. Enablers, disruptors, everyone has a different view, and we thought we'll have a fun conversation, right? So I reached out to Vikas and we said, okay, we'll design questions for each other. So there are some questions questions he's written for me, and then we'll open it up to you guys to ask questions. So our intent here is to take you through a journey a little bit by making understanding of what fintech is, what makes sense, what doesn't work, what's the myths around there, and what we are trying to do as an industry and why it makes a difference. Yeah. So with that, Waqasin, you want to kick it off?
Yes, sure. Thank you very much. Let's get to lunch as quickly as possible. First of all, congratulations on the launch, by the way. Neem, excellent work.
Thank you. We wouldn't have done it without you. So
absolutely, not possible. So we're taking a seat?
Yeah, sure, let's do it.
Absolutely.
Can you see us from there? Yeah.
Right. So without further ado, Nadeem, आपका बहुत experience है fintech side के ऊपर. So just wanted to start by not asking you specifically what is fintech, because that would be derogatory for not only you but the crowd also. The question I want to ask is, okay, where is fintech going? What are the ingredients? What is your experience shortly? And does it have to be a startup to be a fintech, or can it be an existing organization which has had its butter and bread toasted, and this, they can get into fintech?
No, absolutely. Look, I've been doing this since 2010, right? We've started up our own fund in London to be fintech. And this was the world before fintech existed, right? The language of fintech came much later, 2014, 2015. So I would actually want to go back and define a little bit in my head, at least. So there is a concept of fintech, yeah? So tech means that technology has to be there. So if you don't have technology, you need not apply, right? You're not part of the club, it doesn't work. And fin has to be there. Fin is the financial services part. That means it has to make money, it has to make business sense, right? So that's quite important. I think where the industry is going, and we'll be seeing evolutions, and also in Pakistan, is like if you think about the stack, which is what we call the financial institution stack, that's been around for a while, right? So you had, at the top end was a customer acquisition, distribution, then there are products, you have a card product, lending products, payment products, and so on, so that's going on. Then somewhere in the middle sits there some kind of data layer. Then you have a middleware, then you have core banking infrastructure, and from there, then you have a balance sheet and a license, right? So that combination traditionally used to be within one institution, right? That was how it was working for a while. Now what's happened is that all these layers can be done by different players. So you have people doing customer distribution, you have people doing the middleware stuff, API, gateways, and so on. You have people who are using other people's licenses. Balance sheets are not longer just coming from the banks. It can come from third parties as well. So the combination of that is what's happening in the market. So you see people showing up as we are just focused on, like Uran is focused on a particular community. You have people who focus on particular communities like SadaPay and NearPay. They are taking the stack differently. You guys are doing some really interesting work as a full stack bank, but at the same time creating a go-to-market play like Zindagi. Then you're doing a lot of open banking stuff. So that's really a combination of those assets, right? And that's where it makes a big difference, I think, in financial services of, that model is creating a lot of options for the players out there, right? And I think that's how the industry has to see this, is every single layer is a profitable layer, and you have to figure out how to integrate into that. Yeah?
Absolutely, great.
So question from me to you, right? We talk a lot about this industry, and there's a lots of language in this as us versus them, banks are dead, startups are the new thing, and we all go to forums and so on, and both of us always sit there and smile. So what's your thought process? What's your thought process of maybe two questions, right? Is there such a thing? Is it us versus them, or is this more of a collaborative play? And then also, what do you think as a bank, as a traditional commercial bank, can you learn from the new emerging players coming in? And I didn't answer your last question, whether do you have to be a startup? The answer to the question is no, you don't have to be a startup to be a fintech player.
Wow, I learned something new today. Great, thank you. Great question. I think traditionally, honestly, as much as I've seen and experienced, banks do not think of fintechs as them and themselves as us. It's more of a third-party view, which has, for some reason, traversed in the environment or in the industry. It is certainly not like that. Yes, banks have seen fintechs as a competition. We love competition. In digital sense, in tech sense, we would not be here without so many organizations that have come in, Easy Paisa, Jazz, Cash Starting, over the last 15 years and have raised the bar for everybody, for us, for microfinance, for regular organizations that, even telecoms for that matter. उससे हो क्या रहा है, customer की ज़िंदगी बेहतर हो रही है, चाहते हुए ना चाहते हुए, every bank is doing something through arm twisting or through innovation that they genuinely have. And there's so many good examples. So yeah, it is not us versus them. A lot of banks have seen a lot of sense, commercially as well as otherwise, in collaborating. And I think that is the way to go, and you're a shining example of that.
Thank you. So,
so moving on, the question I wanted to ask you, as a sort of a follow-up to that, is fintech bank, for a customer, does it even make a difference where he is? What's your experience?
Yeah,
what's your
look,
take on it?
I think great question, right? It's a, if you look at the UK, at a population of 60 million people, there are something like 468 banks. If you look at Indonesia, population of 280 million people, there are 140 banks. And that's financial institutions of all kinds, right? If you look at Pakistan, we are 31 plus some emerging ones, so add 4 or 5 things, less than 40, right? So what it means is that customers have less options. With these emerging players coming in, with the banks coming in, fintechs coming in, a customer has a lot of options to go and figure out the particular use case they want to solve for, right? Otherwise, you know, the standard products are the same, right? And globally it's the same. Account is an account, card is a card, loan is a loan. It's a saving account of one bank versus a saving account of another bank is really no difference, right? How you package it and how you make it accessible to the customer, that's what making a difference. And so I think what's happening is that the options available to customers, as you said, over the last 15 years with Easy Paisa, Jazz Cash, and now a lot of the EMIs coming in, now the advent of some of the digital banks coming in, some of the commercial banks raising the game. Now every commercial bank has a nice app, mostly, right, mostly. And you know, so that's kind of the retail side. There's still a lot of gaps on the SME side. And so that's coming, that is the next wave coming, I think. But certainly, I think as a consumer, I have a lot more options.
That is what it is all about, having options, right?
Absolutely. So question for you, right? As Chief Digital Officer, there was a lot of conversation in the last panels around artificial intelligence, what's happening, and you know, is this mean that you're going to be out of a job soon, or how do you see artificial intelligence? What impact does it think it have?
It'll take a while to reach to my level, but it'll get there. No, seriously, with every, I don't think so. So to answer your question, I don't think
so
it's
either.
Eating up any job, AI. I've worked with AI for a while, and after ChatGPT, I think everybody is starting to accelerate that program. If you look at historically, if I go very quickly into that perspective, so third industrial revolution, then we have the 19th century, first Europe, then America. There was technological advent at every moment of it, right? That they lived through those people. But you do not see a conveyor belt eating up jobs. It would redirect people to some other job. What positive impact that had was that unskilled labor had to become skilled labor. To start with at the grassroots level. I think that is the essence of technology every time. So I was discussing it with my team today in the morning also, giving examples of elevators, conveyor belts, computers, typewriters, replacing scribes, and then keyboards replacing typewriters to start with, CDs, MTV, you're a music buff, so you'd know. MP3 ate the music industry. I mean, it chewed it alive. But then what happened? Nobody went jobless, not for a while, a long time. Then along came Spotify and various other platforms and rekindled it. So I don't think AI is eating jobs. It's redistributing jobs for a better purpose, a more nobler purpose. And that is for me to raise the bar as an employee, as a resource, to that level where I can complement that tech. I can be the man behind the gun instead of being afraid of that gun.
Yeah.
Yeah?
Yeah, I think that makes a lot of sense. I share the view.
So, moving on, I'll return the
By the way,
favor.
we haven't talked about our answers or something. This is not rehearsed, right? This is all live going on.
Okay. So, there are two terms, interchangeable, are they or not? That's the question. Financial inclusion, and then we have financial wellness. So, are they interchangeable? Are they the same term? Or are they phases into something, you know, one being the next phase of the first?
A great question. I think they are different terms, and I think there are very different, understanding you have to have of them. Financial inclusion for a long time has been a mantra of the industry and a broader, general senses of getting access to bank accounts. And in my opinion, getting access to bank accounts doesn't really move the needle. It's a starting step, but it's a very small starting step, right? What consumers, and this is what we started in 2015, we set up a fund around financial wellness, and so I have a bias there. Is a financial, when you look at a customer, or whether that customer is a consumer or a small business, they have a need which goes across the life cycle, right? So they have a need to, first of all, have control over payments and to be able to access that in a transparent and efficient manner. They have to have access to working capital so they can grow their revenue stream and grow their incomes as individuals, as a business. Then they have to have insurance to mitigate against the risks that happen, whether it's health insurance, fire insurance, and those kind of things. Then it's kind of the aspiration to have a savings, and then from there to investments, right? So I think with the customer landscape, we define financial wellness as the 5 pillars. Those are the 5 key pillars of financial wellness. And I think as financial institutions, we have to solve for that in a much more integrated way than we have done it traditionally. Traditionally, it used to be that you have a payments account somewhere else, and if you want a loan, you have to go somewhere else, and that's all unrelated transactions. So I think that's important. So for us, financial wellness is a very specific thing, which is around those 5 things, and how can you help that? And I think it's a very, very different thing than financial inclusion, which is a great step, but it's a small step in the journey of making people financially well. So, yeah, so my question to you, right? And this is really not just from a fintech, we have defined fintechs as can be anyone, right? So there's options and there's lots of possibilities, whether you're a big bank, small bank, new entrant, and so on. What do you think are some of the regulatory challenges to enable us to create the right kind of products and so on? What do you think we have to navigate through this space, and how do you see the landscape?
So I think any organization, investor from within Pakistan or outside Pakistan coming in has to see the regulatory landscape. That is obvious.
Yep.
What separates e-money from digital financials in this country, as in any other country, are the regulations that we have. One thing I've seen is that when banks are ridiculed for taking too much time on a tech deployment or development or time to market is precisely sometimes, among other things, is the regulatory framework that they have to manage. That is something not to be taken lightly. That is my message to all new fintechs, and I've dealt with a lot of fintechs in terms of our accelerator program at GS Bank, as you would know.
Yep.
It is something that doesn't happen unless you make it happen.
Yep.
And it entirely depends upon the products that you want to bring first, and then later on, what set of regulations you have to go for and undergo and meet. But it is as important as putting in your tech first or putting in your compliance officer first, that you have to ensure that you meet the regulatory framework.
No, I think I agree with that. And I think this is what you guys have done really well, is to, within the regulatory framework, figure out what possibilities exist, right? What options can be created. And similarly, when we went looking for a model, we didn't go down a license route, but went to a partnership model because those are the options available, right? So absolutely, I agree with that. Yeah.
So, question for you, I'll just skip to an important one. Why do fintechs fail, or why do they succeed? What is the science behind it? Some make it, some don't. What's your experience?
Yeah, great question. Having invested in about 100 companies globally, with people like Currency Cloud and Fido and Movin and all kinds of stuff, it's a. I think there are some basic things, and maybe just 3 or 4 things to highlight. Otherwise, it'll be a long conversation. I think firstly, it's the business model and the team that goes around it. Right? Financial services is not like some e-commerce business, it's not a tech business. They say, we talked about this, regulatory understanding, compliance understanding, risk understanding. So you can't just kind of show up and say, okay, I'm going to be a new fintech and I'm going to just do it because I feel like I can enter, right? And often people enter into payments world because they think that's easiest. But that's easiest to enter, but the hardest to make money at, right? So you have to think about this as a business model.
That's
is
very important.
Yeah, super important, right? So oftentimes people show up and don't have a business model, right? Secondly, I think it's very important to think about this as a marathon, right? A lot of times people come into this because execution is everything, right? But execution is, you can't do this in 100-meter sprints. If you look at all the players that we talk about, everyone talks about Revolut and Monzo and Starling and Nubank and, and even tech companies like Amazon and so on. These guys have been around for 10, 12 years, right? Revolut started in 2013. And 10 years later, they are just breaking even, right? Varo Bank, which is now a poster child in the US, is a good friend of mine called Walsh. He's been going to 2013, 10 years later. We look at something and says, oh, SadaPay has been going for 6 months and they haven't made money, oh my God, terrible, right? So that kind of thought process has to change because there's a long-term impact of these things as they're moving. And they're raising, all the ships are rising, right? I think the last two pieces on this is culture. In organizations, super important, as people have said many times, right? Culture beats strategy any day. So what kind of team dynamics you have, how you're engaging in the ecosystem and so on, super, super important. And the last thing, which is probably, when you look at the evaluation of this stuff, and maybe it's most surprising to people, is about timing. So I've seen so many companies which grade everything else, and they fail because the timing is not right, right?
They enter the market at the wrong time.
Something happens, right? Elections happening, COVID happened, other players came in, the investor decided not to invest. All kinds of things which are nothing to do with the company itself. So timing is probably one of the biggest reasons why companies fail. And similarly, why they succeed, right? You just have to get that model right.
Absolutely. Great answer.
Yeah. So we are now going to get into the fun part, right? So we are going to the fun part. There's a fun part. This is a quick fire questions, right? I'm going to ask you questions, and you have 3 seconds to say yes or no answers, right? Or one-word answers, we should say.
Okay.
Right? So. And you can't, the first question you can't answer Neem. You cannot give that answer. So, emerging startup that you wish you had founded.
Monzo.
Would PayPal coming to Pakistan make a difference at all to this market?
Yes.
Okay. Who's going to win the elections?
Muslim League Noon.
Is water wet?
Absolutely.
Yeah. Well, people have different views on it because water is not necessarily wet, it makes you feel wet, right? And Pakistan's national flower?
Chambeli.
Yep. Very cool.
All right. So I'll return the favor. Thank you very much for that. Is fintech a hyper reality?
I think very much a reality.
Okay. Emerging digital bank that you think could have the most impact?
This is a tricky question. I think, I think everyone is doing a great thing. I think that because...
One word.
Because of the Getz family...
2 words, okay.
Hugo Bank.
Hugo
family
Bank.
background, SME, perhaps, right?
Right, I respect that. Favorite city in Pakistan?
Karachi, hands down. Yeah.
Second favorite city?
Second favorite city? Actually, I just went to Hyderabad for the first time. Oh, wow. I really enjoyed it. It's awesome culture dynamics going on there. Yeah.
National tree of Pakistan?
Deodar.
Nice. Can you hear sound in outer space by any chance?
I don't think so. There's no sound.
Did you hear sound in outer space?
I've never been to outer space, but I hear there's no air, no sound. Right?
Thank you very much.
Thank you so much. So we would like to open up. We have a few minutes to open up to any questions. Hopefully that gave you a perspective. It was meant to be a more fun perspective as opposed to a deep conversation. Obviously, we can talk deeply about this stuff, and we spend our lives, daily lives doing it. But happy to take any questions, or we are also ready to hand over to the next panel, as I know we are running out late. Yeah, please. If someone can, whichever mic. If you could just let us know who you are, so we have some context, we can.
Shahzad saab lag rahe hain.
Yeah.
Thank you. My name is Shahzad Isaac. I work for MCV Bank as a Chief Digital Officer. So my question is, what do we do with the impatience problem that we have with the incoming fintechs and startups? They want everything here and now. So what do we do with that?
Yeah, maybe I start with that. And so
it's your area.
So the average age of a successful fintech entrepreneur globally now average age is what? Any guesses?
24?
24. Anyone else? Any other thoughts? 32? So actually it turns out to be about 43. Yeah? So I think in the fintech space, the maturity of the founders, which is changing, and as we are getting more seasoned, the next layer of founders are coming up. I am 56, so this is my second company I founded. My first one was at 43, by the way. But I think that's what a space is that you are getting people who understand the complexity of financial services, and based on that understanding, they are then building patience into the models and so on, and how they're executing. It doesn't mean that there's not space for people who want to do fast stuff, because they are happy to change a conversation. But this is, as I said, is a marathon. So you have to plan for a marathon. Marathon doesn't mean that it's take it easy. Marathon is very hard to do. You have to sustain a certain speed over a long period of time, but you have to build that muscle, right? So that's why I think it's a very different thing of building real businesses in financial services.
So I'll just add to that from another perspective. Shehzad Saab ka bada important sawal tha. I'm taking it as a deeper question. So looking from the other perspective, which is the sponsors. So here's a prediction for you, sort of an alert for everybody. The digital banks, even coming in Pakistan, all over the world, most important thing, again, is patience. But this time, patience of the people who are putting their money in. I hope to God they understand that it's going to take a while to be sustainable, to be a running business. Profitability is something we're even yet to see globally. So if the investors understand that, that is marvelous. If they don't, it's going to be a tough battle.
No, it's a great point. Great point. Any other questions? Yes, please. Yeah, Mike. Thank you.
Assalamu alaikum. I am Ishfaq Ahmed. I have a question. The microfinance bank is so much conservative in terms of the growth, in terms of digitization. Why they are so conservative as compared to the other industries?
Yeah. So, two things, right? One is I think they grew up in a certain era. And so in that era, it was about taking a certain amount of risks and applying similar technologies, similar processes that were in most of the traditional banks, and they took it across and kind of tried to apply it there, right? So it's kind of nothing really changed on the technology front. You're seeing now with some of the folks coming out, Mobilink Bank, for example, Telenor Bank, for example, they are certainly pushing that envelope a little more, right? They also have microfinance licenses. And I think it's a lot to do with culture. It's a culture of the owners, a culture of the investors, a culture of the leadership, of what the risk appetite is, right? And every organization is different. Every organization has a very different risk appetite, and so they have to manage within that. The nice thing about it is that we are not just relying on the microfinance banks to now serve that segment by themselves, right? There are lots of players emerging who are also targeting those segments, and I think that's where the game is changing. So this is microfinance segment, by the way, is same in UK. There's a community savings segment. In the US, there's a similar segment, and they by design and by tradition are more conservative institutions. So I don't think it's anything specific to Pakistan microbanks, but it certainly is an element of how they were set up and how they grew. That's my 2 cents.
I would add to that with a very controversial thing. I'm sorry, I don't mean to cause that, but I like to keep it real. Sir, जिधर पैसा डालो वहाँ लोग आते हैं. Microfinance banks, मेरा जो experience रहा है, they've never been good paymasters, unfortunately. I don't know why that is. आप staff कम करो, अच्छे लोग रखो. Yeah, it is the culture. People change culture. If you can afford Nadeem Saab to join your organization, he has set up another startup in front of me, and he's brought in the culture. He could have done that at a microfinance bank if, bottom line, they could afford him. They can't. That's the problem. That's why all that talent is going into fintech, digital banks, and regular banks for that matter.
Yeah, great point. Last 2 questions, if anyone? No, we're done? Sorry, we're done. Thank you so much. Thank you for your time. Hopefully that was insightful. But thank you, Vikas, for doing this.
Absolute great. Thank you.
Thank you for a very insightful conversation. Radical candor. Now, coming up next is another very exciting panel discussion, and the topic is blockchain technology and the future of banking. To moderate this discussion, I request Mr. Yawar Shamim, Head of Special Initiatives, Pakistan Banks Association, to come on stage and invite the panelists for discussion. Welcome, sir.
Assalamu alaikum. For my panel discussion, I would like to invite the panelists. We start with Waqas Mirza of Avanza Group. Avanza has been doing a lot of work on blockchain in the blockchain sphere. Next, I would like to invite Khurram Abid of Mashriq Digital Bank. Next, I would like to invite Shahzad Ishaq of MCB. And lastly, and not least, is Amin from Faisal Bank. Okay, I think I'll start with Waqas. We have here a fairly educated audience. So, but still, if you could start with giving a background on what this whole blockchain is. Before we start on the real technical questions. So if you can just give a background.
Sure. Thank you very much, Yawar Saab. Assalamu alaikum. Good afternoon, everyone. So the classic definition of blockchain is that it's an immutable, decentralized database in a peer-to-peer network, basically governed through smart contracts. But I'm sure none of that actually, translates into actual English language. So I'll break it down for you. So since the morning sessions, you all have been hearing the great effort that is being put into automating a particular organization, a bank for its customers, or a fintech for its customer. And this is what automation has been about for the past 30 or so years, where organizations have spent a lot of time, energy, money on coming up with cutting-edge tech for themselves internally or for their customers. But there's been a big lacking in the industry, which is of industry players and oftentimes competing industry players collaborating for the bigger good, or to use collective wisdom of exchanging data, sharing data. And this is a problem that blockchain solves, basically. So typically, over the past 20, 30 years, what we've seen is that at best, organizations exchange data with one another. They say, I'll send you a file, you send me a file, then it got down to, messages being exchanged, and now we are in the age of APIs, apparently. And oftentimes, these organizations don't even share data among one another. Somebody in the center, like a bureau or SWIFT in the international remittances, come and say, hey, I'm big enough. I'm trustworthy enough, give me your data and your information and I'll pass it on to whoever else is on the other side. And the third problem is that when these organizations exchange data, they have their own view of the world. If there's an IBFT transaction between bank A and bank B, there is data that's flown between two banks, but both of them are looking into their respective ledgers or their core banking systems, and they're never sure if their positions actually match. And what they oftentimes end up doing is, they say, why don't you send me your end-of-day file and I'll send you my end-of-day file and let's reconcile. So these are the 2-3 problems: lack of trust, and hence an addition of a central entity, and essentially no graceful platform for organizations to exchange information, which blockchain solves. So blockchain is an inter-organization workflow or glue where multiple organizations connect together through a peer-to-peer network, and they all have the same view of information. And the workflows between these organizations are actually governed through something that's called a smart contract, which means these are self-regulated network. Once something has been agreed to be done on the network, it gets done. You don't need a central entity. So this is, in a nutshell, what blockchain is. And there are obviously many use cases and efficacies. So one thing that I'd like to clarify is that there's a whole crypto side of blockchains, which I've not touched upon because that's probably not our topic of discussion today. But in the realm of enterprises and businesses, this is what blockchain is. It's a decentralized network of trust between between different entities.
Thank you. My next question is to Amin. If you could tell me what role do you think blockchain technology can potentially play in Pakistan, in a place like Pakistan?
Thank you very much. I think since the morning we've heard a lot of adjectives and buzzwords like AI, ML, blockchain, etc. So my purpose is कि हमेशा conversation में to try and keep it as simple as possible for the average listener across the board. So blockchain जिस तरह के अभी बात करी वकास ने, so blockchain in its core means the decentralized residency of the data. कि आज अगर हम banks की अगर example लेते हैं, so or any entity for that matter, that data resides in a central repository. So in blockchain, that ownership is not central, it's decentralized, uski multiple uski nodes hoti hain. Now, what you specifically asked me, is technical explanation ke andar, how does it stand to benefit? So it's not just the financial sector as well, because blockchain has got multiple advantages in terms of everyday application. I'll give you a very simple example, in daily life. So healthcare sector is one of the most important areas which can benefit from blockchain. Uski example that all of us sitting in the audience, at some point in time we have gone for, let's say, our blood work, blood tests, etc., or we have accompanied somebody who actually has got a healthcare file at any hospital. So the problem right now is that you as a patient or you as an individual do not own that data. Your own data is captive by that hospital or that entity. So what blockchain will do in the future is that you, across all the networks, you will have the access and ownership of your own data. So this is just one example. There are multiple examples of use cases for blockchain that even in Pakistan, for that matter, like healthcare is one of the most underserved areas. So blockchain, I was speaking earlier to somebody from AKU. So one of the biggest problems in Pakistan is about data sharing. So if you look across Indus Hospital, AKU, all the other big hospitals, so there is no overlap or overarching data sharing. Everybody is secretive about their data. So what blockchain will do is remove all those barriers, so the ownership of data will become common, and that data sharing will lead to AI-based solutions for healthcare, and you'll be able to even, the prognosis can be based on culture or community-based diseases for that matter. So it's the artificial intelligence which will be based on the access of the record which is available out there.
Anything, specific to banking industry, what potential, uses and how it could be, affect the banking industry in Pakistan?
Yeah, absolutely. One of the key areas is what you are spearheading yourself, sir, the eKYC part of it. But even beyond that, in simple daily life, the banks, one of the biggest problems or challenges being faced by the banks right now is the data secrecy, is about the losses in terms of customer data hacking or in terms of fraud transactions. So what blockchain will do is it will create that additional layer which will prevent the hackers from exploiting the vulnerabilities. Because right now, I mean, I don't want to name any entities, but some years ago, there were a couple of banks who actually were hacked or the data was compromised. The perspective is that there's a central pool or there's a central residency of data. So what blockchain does is there's no central pool or there's no central single point of failure. So then, since the data is spread across multiple nodes across the network, so the hackers will not be able to exploit or hack into that data network. So in simple terms, blockchain will, to a great extent, help prevent fraudulent transactions.
Thank you. My next question is to Shehzad Ishaq. And Shehzad, has blockchain technology so far been able to deliver in its promise for the banking industry in Pakistan?
Thank you, Yawasab. We've been discussing since this morning the cultural side of the transformation and the evolution of the future. So that remains at the very core of whatever implementations that will be done or are to be done. Say blockchain is a case in point, or it's also called distributed ledgers technology. Recently, I've come across at least one bank, which is JP Morgan, their platform called Onyx, which is all about international payments and remittances and B2B and B2C payments. They tell their story, how they have scaled it up from just 3-4 customers to, say, more than 24 customers right now on that platform. And the throughput on that platform has already gone into a few $1 billion. So that's one case in point where there has been a scale up achieved. And as far as our country is concerned, you and I had a conversation back in the day over a coffee. The eKYC, I think it's in our context, in our market, in our environment, it's an extremely important case to be tested, which is going to be tested. And the underlying notions are those of transparency, that of uniformity of the data, the standardization, which we discussed is very difficult because different financial institutions record same things in different ways. So, arriving at that minimum common agenda. So that will happen with this kind of technology. And then, also to prevent what we call the risks of terrorism financing and anti-money laundering. So this is a litmus test that Pakistan market is doing, and it's a big one. All leading banks are supporting it. The Pakistan Banks Association and the State Bank of Pakistan are absolutely behind it. If it comes of age, I think it will be tip of the iceberg. The potential of this technology is immense. We also discussed your struggle with the banking executives and the acceptance that some have to change while others are doing it better than others. So the cultural side of it. So all in all, I think whether these are smart contracts related to trade or contracts related to payments or contracts related to other kinds of transactions, corporate banking, immense value to be garnered out of it. But it is a matter of time and it is a matter of acceptance. We are headed in the right direction. Once we scale the first one, that's where we really kick it off.
Thanks. Khurram, what are some of the notable global and regional success stories and failures as far as blockchain is concerned?
Thank you, Yawar Saab. I think a couple of things Shehzad Ishaq Saab already has said. When we were working on this eKYC platform also, So this itself is a big success story because we reviewed Singapore case, India, and some of the other markets. We identified that it is only Bahrain who has actually gone live with the real blockchain-based network, and they are getting the benefit of that, whereas we checked some of the other markets, they were facing challenges and all that. Trade is one example, Trade Connect. Mashreq Bank is also participant in UAE. 19 banks, and they're processing good 30 to 50,000 invoices a month. Bahrain KYC I discussed. Ripple is one classic example. I was previously part of Standard Chartered, and they also venture with that. Ripple was also meant to be alternate to SWIFT, and they are also doing great. So they are very good success stories also. Having said that, as Shahzad Saab said, and you also know how much struggle we did when we were doing analysis for the right solution and all that. Pakistan banking industry at this moment has not adopted any of the solution. Let's call a spade a spade. Good thing with KYC platform, if we get success in that case, is that this platform will be, we will be able to use it for other use cases also, right? And this can be a classic start, right? What will be the key to success? I think more effective in terms of cost and efficiency, secured, and trust. And this is something which is the primary claim of blockchain technologies. So I would request everybody who can help in adopting this thing. Initially, definitely there will be cases, but we should go for that. And to be honest, our first time, of course, working in a digital bank, but now I am realizing that majority of our processes which we claim that these are automated, actually are not fully automated. Majority of them are semi-automated. And this is something which we are trying to crack, right? Yeah. Many physical verifications happen in today banking industry, which can be easily replaced with, if we go with blockchain-based solutions and all that. So huge opportunity. Industry is available. Our neighbor UAE has many use cases. Middle East itself, we have a couple of one. So I think high time for Pakistani banking industry to move on, with this thing.
Thanks. Amin, what do you think, what should the banking industry do to, to adopt this technology, and what is required now for the banking industry?
I think initially the most important part is that the infrastructure needs to be there. So although PB has taken lead in terms of creating that first step, so the proof of the pudding lies in the eating part of it. So I guess banks are a bit reluctant in adopting new technology, especially since we're talking about even globally, blockchain is a new tech by itself. So eKYC in Pakistan could be a starting point. Like I mentioned, one of the more bigger cases for Pakistan could be the data secrecy. Traceability, transparency, and security. These are the three elements of blockchain. So the traceability part of it, in simple terms, that blockchain is like the GPS of the transaction world. It not only prevents that AML, it also creates a security, it also saves the time. So in Pakistan, for the banks to adopt it, I believe that platform needs to be laid out, the regulations need to be laid out. So that's the starting point for this entire piece altogether.
Yeah.
So perfectly responded. But I think normally, since I've also worked for 20 years in technology in a bank, right? I've realized this. We always have our plates full for so many deliveries and all that. It is something which is a regulatory mandate which push us, to be honest, right? The serious regulatory sponsorship will add a good value in my view, right? And a sense of ownership, if we are able to get out of people's busy schedule and really present what exactly is the solution, it is equally secure and all that. When we were analyzing, we also considered that. But if we get a good sponsorship from regulator, if we get a good sponsorship from the banks itself, will be an amazing thing,
Vikas, Has the blockchain technology, so far been able to deliver on its promise? The question to you now. I know I've asked this question, earlier also, but what is your take on it?
So I can't take a global view, but I'll take a regional view. And I can tell you that, I mean, Avanza, the company that I represent, we've done 20 plus blockchain implementations in the region, where each implementation is a national or a city scale network solving a very specific problem. And the kind of projects that we do not happen by accident. They're tied up with a 2030, 2050 vision of a country. If a country wants to become a commerce hub, if a country wants to become an e-commerce hub, if they want to become a tourist hub. So the kind of problems that you solve through a technology like blockchain have to be really big problems. Like I said, you don't implement blockchain for the automation of one particular organization. You implement blockchain to move a sector 10x, to achieve a goal. That is why these projects are few. You can't have volumes of blockchain projects. But when done right, they have delivered. But you need to have the right recipe. And I keep telling people, the biggest challenge in doing blockchain projects is not technology, it's lobbying.
Yeah.
Having multiple organizations sit across a table, and competing organizations, mind you, to solve a problem is challenging. I mean, we are doing a project with 30 banks, with you. Try arranging a meeting, with 30 banks and their representatives. So those are the challenges, but when done right, when governance model is in place, when you have a very strong championing entity, when there's enough incentive for the participating entities to join the platform, you'll find that you have a good mix and the right recipe, and then we see success. So yes, when done rightly, blockchain is delivered on its promise.
I agree, and the experience that you and I have gone through, and I would like to add here is that once the connectivity between banks is established, this is going to be a an amazing thing that to have all the banks in Pakistan connected through blockchain, and eKYC is just one use case. So there's so many other use cases, as Amin just said. There's so many other use cases.
So if I can add to that, so essentially what we're doing is we're building a highway to connect all the banks without a central entity in the middle. So all the banks connected with one another in a self-regulated, secure, immutable network. And the first kind of traffic that we are moving is eKYC. But then we have a long way to go of trade finance, and eventually in our lifetime, we can have digital checks. We could even have check clearing on blockchain, and there are many more use cases. So we see a blockchain network of banks as a very valuable financial asset for a country, which could be repurposed for a lot of problems at an industry level.
Okay. My last question to Shehzad. What role do you think regulators have in promoting blockchain technology, use of the blockchain technology in the banking industry?
An important one, firstly.
What do you want from State Bank?
Yeah. So, we've shied away from having discussions on, say, the application in terms of cryptocurrencies and central bank currencies, CDBCs, digital currencies. So, I know of a case study where Singapore, Monetary Authority of Singapore and Australian Monetary Authority, they are working to develop a currency which would be a digital currency which would be usable in both the geographies. Similarly, I'm also aware that State Bank of Pakistan is working on a sandbox, and they're near completion of it, where they would be testing their own digital currency. So that's on the currency side of utilization of blockchain. Other than that, an enabling environment, like we just heard that if certain things are mandated in a market like ours, South Asia, things work faster and better. We also have a recent example of the drives related to whether it was Roshan digital account, although these are unrelated in one way, but when things get mandated, they go way faster. So the regulator can step in and give that platform or enabling environment, or put some ask on the commercial financial institutions to start utilizing these technologies. Yawar Saab, on top of that, I must add that we need to have a national consensus, or the struggle that you talked about. At least in one other market in the Western world I've seen, where that market put together their key banks, key technology companies, and their key telecommunication companies, and they told them, why don't you make a shared ecosystem for this market, and you can compete intensely in the marketplace on your products and services, but on the ecosystem you use it shared. So from what I've understood from Vikas is that if it's industry sectoral level cases, then what regulator or regulators can do is to be that enabling force to bring the key stakeholders together, enable them to make a shared ecosystem, and then make the use cases work out of it. And that can be a lot of market play. So it's a combination of what to do and how to do that I think will move the needles forward.
Thank you. They themselves have some of the use cases. State Bank ने कुछ अर्सा पहले price bonds कुछ बंद किए थे, big ticket size जो थे. If you issue on blockchain, what is stopping? And then you have all issues, जितने भी issues थे physical price bond के साथ वो आपके solve हो जाते हैं. इस तरह के बहुत सारे test cases हो सकते हैं, use cases हो सकते हैं, which State Bank themselves also will get benefit.
Thank you, gentlemen. We've had a very fruitful discussion on this interesting topic of blockchain. We'll take questions if there are any from the audience. We'll take 2 or 3. We don't have much time. Okay, thank you. If there aren't any, thank you
we
very
were
much.
either very thorough or very confusing. That's why nobody seemed to have a question. But thank you very much for your time. Thank you.
Thank you very much for that insightful discussion. A highway connecting banks in a self-regulated environment. What a lovely thought. Next in line is Mr. Ali Safri, CTO of Avanza Innovations, and he will deliver his presentation on banking in the Metaverse, the next digital frontier for financial services. Mr. Ali Safri. Do we have Mr. Ali Safri? He's right here. Sorry, I have a tendency of just looking at the audience.
Yeah.
Over to you, sir.
Okay. So the slides. Hello, everyone. So today I'm going to discuss about the Metaverse banking, that how Metaverse can open new opportunities. So we have heard about all the speakers in the day is that the branches are going to be kind of non-existent in the near future, or they would be kind of truncated as small units, right? So how Metaverse could enable this particular transition to provide a branch whereby the customer could be served based on the self-service and the assisted journey, right? So we will take across that how this metaverse is going to change this particular space. Now, user interface, that how you interact with the computers has evolved over time. So we could see across that in the 80s and 90s, these were the kind of the user interfaces. And then we are right now doing all our banking using internet and mobile banking. So that's something that we have. We have a set of technology stacks. We have our networks. We have our infrastructures, the databases, the identity, and the applications on top of it that are available. And we are fine with it, right? We say across, OK, mobile banking, internet banking is there. Our customer is being served. That's very good. But again, what happens is that new technologies, because the creative mind of the humanity is not stopping, so new technologies are coming across. We have generated AI, we have blockchain, smart contracts, quantum computing, something is happening over in that particular space as well. 5G as a telecom technology is coming, IoT is there. So again, one of the technologies is spatial computing or immersive experiences, or what we call as a metaverse. Now, this particular stack, based on which the applications are being designed right now, what we think across, that is all going to change. Because when you have a CPU, GPU, a quantum processing unit is going to make a class of other problems become much faster, right? AI is going to change the way how we interact and create the applications. Maybe there would be a live application which would actually see across what are the new requirements, and it is automatically going to create the screens over there. So there is no programmers, for example, required in that particular case, right? Now, we will focus only on this particular evolution of the spatial computing, for example, and what we think across that this is going to be the new normal. It would be just a kind of a transition that we have a mobile phone now, and there was 3310 Nokia mobile. So similarly, this particular mobile, in terms of the immersive experiences, would be same in next 5 years or 10 years. Now, if we see across, evolution of experience has changed. Similarly, the size of the devices have changed. We have this particular computing device in our pockets now. Similarly, the access patterns, they have changed. We used to have keyboard and mouse, but now we are more swiping across onto the screen of a mobile phone. Similarly, the next transition is why to actually be having a 2D kind of an interface in which we interact with the applications. It could be more immersive. It could be more 3D, just like the real world. More better devices are coming across. Apple is coming up, for example, with the Vision Pro device. And why we need to use keyboard or, for example, touch pad or something like that, why we need to swipe. We can use the voice to give commands, and based on this, thing could happen. Imagine I have to fill a form. I could just speak out the things, and it is going to fill that particular form. The technology exists now, right? So a combination which is combining this immersive technology as well as the generative AI capabilities creates an AI-enabled metaverse. Now, what we think across is that this is the regular that we are happy with, the internet banking or the mobile application that you have. But as the evolution is happening, you have a Gen Z who loves gaming. They want this 3D kind of experiences. So these guys are going to be the new kind of audience that you will be having as customers. Big companies like Meta coming with their Quest 3 or Apple coming with their Vision Pro devices, which have a kind of a reputation in the market. So these would be available. NVIDIA is coming up with new and new GPU, better devices. Generative AI for the 3D content is coming as well, and we have faster bandwidths. So the new regular would be 3D-based immersive experiences, not just 2D-based experiences that we are used to, right? Now, if we see the statistics, the Gen Z or the millennials, they play a lot of games, right? So they would be used to more this kind of things, and they would not be happy with 2D kind of experience. So if it is being said across that metaverse, is it nice to have? Then maybe, but if you want to be ahead of the game, then you should actually explore this particular frontier as well. Now, there are two approaches to it as well. One is this particular gears that are available. Yes, they are bulky, they are expensive. But whatever the Gen Z plays the game, they are on the laptops, they are on the mobile, they are based on 3D. So still that particular immersive behavior could be provided onto these particular devices. If we see across that, okay, maybe that might not be true. So these are the statistics, for example, for Fortnite, Roblox, Minecraft, and other platforms whereby people are playing the games and exploring the metaverses. So these are huge numbers, right? So we should actually go across to catch that particular customer. But there is one problem. There are a lot of public metaverse platforms. The problem is they could be good for fun and games, but when you are talking about an enterprise adopting the metaverse, you have to ask this question: how integration with the core system is going to happen? What about the data residency, governance, omni-channel approach, secure and trusted, scalable, and how to quickly make the changes in that particular metaverse, right? So what is required is a strategy whereby a platform is available for the metaverse so that you could cater to this particular upcoming revolution that is coming across. Now, some people have in their mind that, okay, in the metaverse, I would create a real estate where people can come and just see some posters. That's useless. It is like having a fancy car which you cannot drive, right? Enterprise have to be very, very savvy about their customers, that they are serving their customers within the metaverse. So it is basically a new channel where the customer can do self-service. It can be assisted service. If an agent is required, the agent can just pop in and serve that particular customer, and you could analyze and improve that particular thing. So a lot of building blocks are there. A complete customer journey could be done. Virtual customer interactions could be done. Enhanced customer satisfaction would happen. There would be survey reviews, transactions, analysis and reporting. There would be an ability to authenticate that particular customer using maybe a facial authentication or an SSO. There is a trusted document wallet. There are LLM-enabled bots which understand natural language to answer the queries of that particular customer and serve them. Let's say the customer asks, I want to open an account. They just open up that particular form for him, that fill this particular form, rather than I having to dig on a current website how to actually open the form, right? So all these interactions could be better. There could be conversational transaction that I say across pay my KESC bill, for example, for 200 rupees. So it just performs that particular transaction. Then there would be other things like happiness recording, special sound, signature, polls, videos, teleportation, invitation management, conversational lip sync, which is like if you are speaking across, so you are doing some gestures, your lips are also doing that particular lip sync. So all these things will make more real the interaction of that particular customers. And you can do that analytics of your 3D space, that where people are interacting across and doing interactions within that thing. So the idea is this platform should be able to educate and train, ability to discover your organization, view its relationship with the organization, transact on this particular platform. Assisted customer journey should be there. The customer could be onboarded over here. Cross-sell and upsell of the product should be done over here. Engagement of the customer is done over here. So it is like if your customer comes over here, it is not about omni-channel anymore. This is the channel whereby everything end-to-end transaction is completed across, right? So Metaverse has that particular capability to become that particular channel. And this is the same thing when people are telling about there is no need of branch, right? But human interaction is required. So this is a bridge between both the digital and the physical worlds. Now, if we see across in my bank, what do you do? If we see across that we have seamless journeys, so my user could see the relationship with the bank. He could log in, scroll down, and view the things in 2D environment. They can perform the transaction by filling the forms, right, using the keyboard. If they are struggling with something on your mobile app, what would they do? They try to explore some fact or ask a chatbot, or then, again, they're frustrated. They call the IVR, and they ask for an agent support. That's what they do. So it's a breaking journey. He is not on the mobile application anymore. You have wealth management services. You ask them to visit the branch because it's a one-to-one personalized interaction. You need the documents, you ask them to submit the documents, but again, who take scared that these documents would not be actually misused for some other purposes? You have to put a lot of structures around that particular area. If they have interest in the project, some product, then you ask him to fill the form, and then you get back to those particular customers. Then you have to launch a product. You do a small event somewhere where a limited audience could come across, and it's not interactive, right? It's one-way speaking that is happening across, and your marketing is based on sending emails out. Maybe whoever is seeing the emails, so it is not that interactive. So what we see across is that whatever ecosystem that we have, it is not that seamless journey. Now, I'll try to specify that what could happen in case of a metaverse. So let's take an example whereby I could check out my banking relationship, which is there. So this is that avatar, localized avatar. What is happening is that a facial authentication is happening for this particular user in real time. Based on that, real-time data would come from the core systems, and that particular things could be explored in a more immersive manner. You have a mobile application, yes, you can show that particular thing, but it is much more immersive experience that is possible within the metaverse. So secondly, we could see another scenario that how
मैं अपना बिल कैसे पे कर सकता हूँ?
So we are asking the bot. It is going to open a form.
मैं KESC का इलेक्ट्रिसिटी का 1000 रुपए का बिल जो कि मेरा रिलेशनशिप नंबर 12345 है अपने मास्टर प्लैटिनम क्रेडिट कार्ड से पे करना चाहता हूँ.
So you just speak across and perform the transactions, and a bot is there to assist you. Similarly, there could be cases the customer is frustrated, he requires an agent support. Agent is at the background, just pops inside that particular metaverse, and in a more natural style.
और मैं आपकी कैसे मदद कर सकता हूँ? आपका खुशामदीद और मैं आपकी कैसे मदद कर सकता हूँ?
With gestures, with lip sync, the avatar can assist them. And then it could be promoted into a video call. Right there is no Teams. It is like from within the metaverse, you are doing this particular conference call. And then you could record it, because if it is required based on certain requirements. And the complete end-to-end interaction is being recorded. So this is how organization could allow users to explore their organization, do self-service, do bot-assisted journeys, as well as agent-assisted journeys within the metaverse. And when it is a time to actually do a marketing event, because in the metaverse there are no limits, right? So you could create a party kind of environment whereby you could actually go educate your users and do any kind of promotions, whereby a number of people could connect and they could actually talk with each other, interact with each other, and know about that particular organization as well. So the idea is you have a digital frontier, you have a physical frontier. This metaverse could be a middle ground which combines both of them, right? You could onboard, you could engage, you could transact, you could do everything with connecting with your core system, connecting with your core employee, and utilizing the technologies like the human language, which is based on generative AI, trust and transparency, which is based on the blockchain, and if there is a real-time data coming from the real world, that could be translated within the metaverse in terms of IoT. So it is a channel having a potential to get everything done seamlessly from just within the metaverse. So how do you go about it? The first thing is this particular platform selection, so that you have a very strong platform that you could deploy on your own infrastructure, because a public metaverse, you would never want to integrate with it. But if it's on your infrastructure, you would integrate and provide more services to your customers. Then you should identify, because there would be a huge class of use cases that could happen, that are possible, and maybe you do not want to go initially with all of them, right? So you might like to choose those cases. So there would be a qualification criteria of what type of use cases should go to the metaverse. And then there is a community engagement that you need to actually identify your target audience, which would be this newer generation, and attract them. That's similar to the gaming. Our new channel is there, so they will start to participate on those particular channels. So are you ready to embark on your multi-year metaverse strategy? That's the question. So in case if anybody wants more details, we are present here, and we could demonstrate a demo as well. So yeah. So I hope I was on time, right?
Thank you, Ali. That was extremely exciting. I know we're all hungry, but our final session for the day is actually a very important panel discussion on cybersecurity at the core of digital transformation. And to moderate this, I'm going to request Mr. Avais Ejaz, CISO and Group Head Information Security at Governance at Allied Bank Limited. This session has been sponsored by Secure Networks. Mr. Avais, please come on the stage and kindly introduce the panel. Over to you, sir.
Thank you. Assalamu alaikum, ladies and gentlemen. I would like to call upon stage Mr. Asif Minai, Chief Information Security Officer at Habib Bank. Mr. Tausif Aslam, Chief Information Security Officer at UBL. Mr. Zishan Siddiqui, CISO at Bank Alfla. Mr. Ashar Faisal Khan, CEO Comtel Systems. Mr. Ali Imran, CISO at Bank Islami. And finally, Asad Effendi, CEO Secure Networks. Ladies and gentlemen, before we begin with the panel discussion, I would like to show you a very short clip, a video clip of the digital transformation in which we live today.
It's not just about technology, it's about the future of how people are going to live and work.
Thank you. In this digital era where we live, cybersecurity is important, is significant. The threat landscape of 2023 is really, really scary, considering this digital transformation being going on. The cost of cyber crimes is expected to touch $8 trillion by 2023, according to a research which makes cybersecurity as the world's third largest economy after US and China. In Q1 2023, 41.6 million breaches were observed, which makes one breach in every second. The frequency of cyber attacks have been observed to be exponentially high. We have observed 2,200 cyber attacks in this quarter, which makes one cyber attack in every 39 seconds. 560,000 malware samples are being generated on a daily basis. And today, in the world we live, we have 1 billion malware variants and samples. DDoS attacks is on the rise. There has been an year-on-year growth around 60% in terms of DDoS attacks. Today, 3.4 billion phishing emails are being observed over the internet. Supply chain attacks, if you all remember the SolarWinds supply chain attack in the times of COVID, there has been an increase of 742% in the supply chain attacks in the last 3 years. 75% of 1,400 organizations being interviewed were victims of ransomware attacks. Lastly, and on top of it, today the world is short of 3.5 million cybersecurity resources, which makes this equation very complex, considering the digital transformation and the digital era in which we live. I would like to open up my discussion with Mr. Asif Minai, the CISO at Habib Bank. Asif bhai, you being one of the most prominent CISOs and an industry veteran, why is cybersecurity considered a fundamental component in this digital transformation journey?
Thank you, Wes. I think you have rightly pointed out in terms of the transformation efforts that organizations are undergoing. Digital transformation is obviously a very important element of changing how world operates. I think one of the key factors behind triggering this overall digital transformation was the COVID era that we had witnessed. And we had clearly seen that it has basically led to the entire footprint change in terms of how we are operating in an environment under the digital era. In Pakistan, obviously, I mean, it's relatively new in our market. And just like in any organization, cybersecurity basically comes at the helm of affairs in terms of how we can gain customer trust, how we can, the way I see digital transformation and the way I see digitization being marketed to the consumers, I think cybersecurity can be one of the marketing factors of how you market your products. So, I mean, the key apprehension that people have behind using digital products is this very element. How safe is their data? How safe is their identity? And that is where their trust with the organizations come into play. It leads to different risks, identity theft. We talk about cyber breaches. We talk about data breaches, cyber frauds. You see a lot of non-state actors, a lot of negative actors coming into play in terms of exploiting this information, this data. So that's all part of the digital transformation journey that we undergo. So in any organization, I strongly believe that cybersecurity personnel should be embedded in the entire ecosystem in terms of how we are designing our products, how we are taking forward the journey of digitization.
Okay, great. Tausif, you belonged to the telecom industry previously, and now you are into the banking industry. What are the potential risks and challenges associated with this digital transformation efforts being going on?
Okay, thanks, Avais. So digital transformation basically brings a change in the organization, the way business is being done. It also explored the potential different avenues for the business as well. So it's not about the basic, you can say, robotic process automation type of thing, where we just change the operation. So it goes beyond. When it goes beyond, so I think the most important thing is when we transform the business processes, when we bring in the new business model, so that in that aspect, the risk assessments should be there, so that we can identify the risks, and then we build, do the security by design to build those control within those processes. I think that's a very important thing when we talk about the digital transformation. Second important thing in the digital transformation is the way of doing business. So digital transformation, so this happens, this change the culture of the organization as well. So there's a lot of collaboration with the partners within the organization. So how we manage that supply chain things, because in the digital transformation, people, our development teams basically use a lot of libraries and software cores from here and there. So how we build trust on that, so how we manage those relationships with the different suppliers and partners so that our organization remains secure. And last,
is it something to worry about, or is it okay? I think it's okay.
Yeah. And the last thing is, sorry, I think I lost that.
Okay, my next question would be to Zishan Siddiqui. Zishan has an experience of working in cybersecurity in Saudi Arabia. Then he was in Habib Bank and now in Bank Al-Flah. So Zishan, how can organizations ensure that cybersecurity is integrated into their digital design and architecture in overall?
Okay, thank you Is for having me here. As we all have witnessed that during and after pandemic, most of the companies and most of the organizations relied on the digital channel instead of their legacy traditional businesses.
Okay.
And we need to make sure that security is built in each and every step of this journey of digital transformation and to get it successful. And we see a number of times that most of the companies, due to the lack of knowledge, just got into rush to bring newer technologies and near softwares online, they overlook cybersecurity. And that make them highly vulnerable to the cyber attacks. And as per the survey, in European countries, like 8 out of 10 companies got affected by cyber attacks yearly. So to make sure that cybersecurity is an integral part of the digital transformation, strategies including cybersecurity strategy and digital business strategies should be aligned. And if we talk about the processes, secure software development lifecycle process should be properly understood by the developers, and it should be incorporated in the development process. With regards to information security awareness and cyber culture, proper information security awareness program should be developed, and matrices should be there to evaluate the effectiveness of cybersecurity level of the company employees and customers on the regular basis. And most importantly, to me, in my view, the collaboration and synergy.
How do you see organizations cope up or manage the cybersecurity incidents when it comes to security operations? What is the role of organizations that they should handle these incidents appropriately so that we have this digital journey going on very seamlessly?
So if you look at it, I think the incidents, when an incident happens, I think declaring an incident is an important thing. I think that's the first thing where the CISO comes in and they have to look at it if it's really an incident. I think in terms of, we're sitting in a financial conference, so when you talk about an organization like a bank, so an incident is a big thing because it has a huge impact. So the CISO is looking at, I mean, if you talk from an operational perspective, of course, they have to look at what procedures they have in place. They have local teams who's going to manage the incidents. They have international partners to come in
and work with them in terms of identifying the incident and having all the forensic around it, because if they have to legally pursue it, they need to have the right information to work on it. And from a insurance perspective, they need that. But if you look at the organization, when there's an incident, the entire management has to be onboarded. You have to have your CXOs onboarded. You need to have a framework, how you're going to pass on this information to your management, how they're going to validate it, and then you have your legal and PR and other departments, how you're going to disseminate that information. Not only that, because you work under a very strict regulator, so if there's a breach, there's an incident, there has to be a communication across to the regulator as well. Not only that, I think there is a very close-knitted financial sector in terms of the collaboration among banks. So not only you're talking about all those things that I've mentioned, but information sharing between different CISOs and trying to share the experience or what has happened with them, so the other banks can learn from it and actually try to ward it. So there's a lot of things happen when you're talking about insurance, especially in the financial sector.
Yeah, sorry. So additionally, what steps do you see? Because in the last 2 to 3 years, State Bank has been active in the banking sector, and we have seen a lot of pushback from State Bank regarding implementation of controls, different frameworks, different policies coming in. So what additional steps should be taken? Because we have seen 2 to 3 incidents in the last 1.5 years. Because these are very traditional sort of steps being taken by institutes. So what additionally we need to
I always believe, and I've been preaching it for the last decade or so, is that early detection is the way forward, right? If you look at the scenarios, everyone can be breached, will be breached. It's the early detection. If you have the right teams, right partners, right technology, right controls, and if you can detect the incident on the MITRE framework and the kill chain process early, you can actually mitigate it quicker as well. So I always tell everyone, guys, you need to work on those strategies. And MDR, Managed Defense and Response, is one thing, and we have been pushing it for years and years. HBL has been one of the pioneers when they started off with MDR at least a decade or most probably. So one of the first banks to do it, right? So it adds value. So additionally, I always would recommend strongly to go back to the basics, which is early detection. If you can do that, rest will just follow automatically.
Okay, thank you. Ali, Bank Islami, how does the integration of cybersecurity into digital transformation strategies impact the overall security posture of the organization? Because security posture is something which is a layered defense of your organization. You need to have a layered posture to combat cyber attacks. You need to have this perimeter security, then endpoint security, application and database security. So how does this fit into the digital transformation journey?
Thank you, Wes. Well, I think it has a multifaceted impact overall on the security posture of the organization. Basically, if you integrate cybersecurity into your digital transformation initiatives, basically it transforms security as being an isolated and reactive function into a proactive and the integral part of the organization's business, basically. So security is considered as a business enabler once you integrate that. It allows organizations to detect and identify and detect cybersecurity threats and vulnerabilities, security risks early in the process. So understanding all those vulnerabilities and threats in advance, I mean, the businesses can they can design the processes and the systems with security in mind, and that's preventing the likelihood of security breaches. Moreover, digital transformation often involves lots of handling sensitive data. So by integrating cybersecurity, you basically ensure that you're protecting sensitive data appropriately and in accordance with their classification level, which data you need to encrypt and what kind of access controls you need to implement based on sensitivity of the data. Well, it's also compliance with regulatory requirements is more attainable, basically. You can align to your cybersecurity measures according to the applicable data protection laws or whatever industry-specific regulations you have. And then, I mean, you can minimize the impact of any legal financial risk. Moreover, it basically, the organization basically, it strengthens the organization's ability to detect and respond to emerging cybersecurity threats promptly. For example, organization can leverage AI and machine learning technologies, to detect the anomalies and the potential security risks within their environment in a real time, and they basically, it can leverage basically such technologies. Security conscious organizations basically they gain a competitive edge in the market, as one of my colleagues also mentioned earlier. They can market, organization can market their commitment to cybersecurity, and basically that is a differentiator in attracting more business and customers, obviously.
Okay, great. You mentioned about the role of regulatory compliance. So my next question would be to Asad. Asad being from the service provider and vendor industry, and you have different products to offer to customers. How does this regulatory compliance play a role in cybersecurity in the digital transformation journey, especially when it comes to compliance and handling different compliance-related matters, especially from the regulator? Then we have different standards. We have NIST, we have PCI DSS, GDPR. So how does this comes into picture?
In the digital landscape, whether it is a banking industry or any other industry we talk about, when you go digital, you're actually taking your core, your digital assets, your technology closer to your consumer, your user, whichever basic any aspects we are talking about. So it is very important from the compliance perspective that you give confidence both to the service provider and as well as to the consumer regarding data protection, compliance, governance, risk, and on top of all of it, yes, the cyber risk associated with these domains. As soon as you take your digital assets closer to your consumer, you need to authenticate them, you need to provide them access, and with that, you will be collecting a lot of data. So for a consumer, which has to trust your digital assets, he has to be confident that my identity, my data has to be is protected. And from the regulator perspective, it is very important to give this confidence to these consumers, to users of the digital technologies, that their data is governed and secured by some internationally standard compliance, whether it is GDPR, PCI, as you are mentioning. So the regulators globally are doing a great job, as I believe, when it comes to protecting the identities and stopping cyber attacks with the help of compliance that they are putting. And same is the case in Pakistan. We have seen State Bank has, in the last 1 decade, has built robust compliance regulations, frameworks against cybersecurity, against protection of identities, and so yeah, it is a very important role, and I think things have.
Okay, Asad. Additionally, because you work with different banks and different customers, so are these customers ready to embrace the frameworks or to implement the frameworks provided by State Bank? What is your feedback on this?
So from the banking perspective, I believe yes. Our banking industry has evolved in the last 7 to 8 years. They have done a lot, they have done enough which could be done in the time frame that we had in the last 6, 7 years. And what I believe is that our banking industry also face other challenges, like economical challenges and the other, third party, or you can say the environmental or regional challenges that we go through in acquiring the technologies, in implementing them,
the skill set shortage and everything. But saying all of that, from the compliance security framework point of view, I think our banks have given a huge confidence to their consumers from the security point of view and fulfilling those compliance framework requirements. But the other industries, to be honest, I think we are far below par, from the compliance perspective.
Okay. So Ashar, regarding cybersecurity incidents, the operations of SOC, you mentioned about how to manage these cybersecurity incidents. So what sort of performance matrices or what sort of KPIs are you looking at to manage these cybersecurity incidents, especially in this digital era?
So technically, whatever work you do, I mean, there has to be accountability around it, right? So if you're doing some work and you're going to figure it out if it's working or not, so there has to be some KPIs around it.
Yeah.
In terms of the industry, financial industry, I think the financial industry especially come a long way. If you look at, so basically you need SLAs. Like you run a call center, you want to know how quickly an agent is responding to something, how long is the call, how much is the wait in the queue and stuff like this. So similarly, you have SLAs when it comes to a SOC when you're running it. So if I divide it into two things, one is the detection, and then you're responding to it.
Yeah.
So you're looking at your MTT, and then you're looking at MTTR. So when you look at the MITRE framework and you want to evaluate how good or your efficient your SOC is, so you create an average and you create dashboards which are typically your SLAs of your MTT and MTTR. So definitely there are KPIs. I think the industry has especially come a long way in terms of initially focusing on setting up a SOC, making it 24/7, because we have seen that, right? There were no 24/7 SOC even in the financial sector a decade or most probably. And again, HPL was one of the first, I think, in the industry which actually had a 24/7 SOC running in the industry. So in order to achieve those SLAs, I think that's the most important part. How do you look at those SLAs and how you can get to that particular point? Because if you look at the European markets and you look at the international benchmarks, you're looking at MTD of 30 minutes, right? So how do you reach to that level, right? Where you have
that's an important point, because what is the benchmark? What should be a mean time to detect and mean time to respond for an incident? Ideal time.
Globally, if you work with the international MSSP, like a European company or some American company which is providing you a managed service, you're looking at 30 minutes MTD, right?
Okay.
And you're looking at response time of maximum 4 hours. That's where the thing is. But the main important question is how do you reach there, right? You have a lot of technology, you have a lot of controls. It actually is a very complex thing when you have so many technologies integrated together. So I think the way forward is the automation.
Okay.
Banks who have invested in automation, they have real-time automation in terms of the workflows, in terms of, for example, even if you're putting up simple IOCs, right? So you receive Visa IOCs and you want to push it. If you're running a manual workflow, you're sending an email to the IT department to go and put it up. I mean, look at the response time. You're looking at days, hours, and just to give you a very small example. But what if you have a SOAR platform running or an automation tool on top of whatever technology you're running, and whenever the IOCs come in, it can come in automatically in your system. You can ingest it into your SOAR platform, and automatically it can be pushed towards your controls, right? So, of course, the SLAs are there. You need to focus on that. You can see in terms of the efficiency of a SOC, if you're putting in so many millions of dollars in terms of having teams, on-site, off-site, you have international providers working with you, and a lot of technology with a lot of subscription going on, because security is mostly based on subscription. You need to have how you evaluate the efficiency of the SOC. So I think in just high level, this is how you look at it.
Okay, thank you, Ashar. Zishan, what are the key challenges that businesses face when trying to balance innovation and cybersecurity in the context of digital transformation? Because we need to see a right balance in this regard. So what is your take on this?
Yeah, like it is it's a question from the business, and I'm answering from the CISO's perspective. So yeah, a key challenge lies in finding a true balance between innovation and cybersecurity. And where innovation creates or opens the door for new business ideas or business avenues, it also opens the doors for the new risks or new vulnerabilities. And if the implementation of controls may hamper the business processes and face a challenge in time to market new products and new ideas. So there must strike a balanced approach in between putting the security controls, and businesses should be carefully select the controls to safeguard their assets and in achieving the customers' confidence and customers' experience shouldn't be impacted. And one more thing, that when we speak about digital, that means there is no boundary or perimeter-less environment. So safeguarding the assets in that environment is a tough ask, and finding a compatible technology with the desired security features is one of the biggest challenges I believe the business face. Also, on the top of it, the cost. The implementation of security controls requires a huge cost, and business has to allocate a dedicated budget for those information security controls. So it could be one of the biggest challenges.
Okay, thank you. Tausif, we talked about some standards like NIST, ISO, PCI DSS, and then we have this regulatory requirements from the central bank, and we have different regulatory requirements from banks having offshore branches in other countries. So what do you think, what sort of standards or best practices should be followed in terms of cybersecurity?
Okay, yes. So for digital transformation, I think already the standards that we have, like NIST, CSF, CIS Top 20, and ISO 27001, I think they suffice. So there is no need for yet another standard to secure the digital transformation. But I think keeping in view the very nature of digital transformation, so there are two things that I would like to highlight, which need to be adopted. So one thing is, in the digital transformation, basically we use the development methods using agile project management and developments. So there, if we miss the security and we try to put it in that old model of waterfall where security comes at the end, so then it do not work. So I just will combine it with the Sean question. So let's say we have to implement a two-factor authentication into our digital app. So one approach where we bring security within the development cycle, within the business requirement, will be where an OTP is sent onto the app and it is auto-populated without disrupting the customer experience that our digital colleagues will love to have. And a very legacy approach will be where we divert it to some Google Authenticator and bring it off channel. And that will really hamper the customer experience. So I think this is the important thing that we bring in while we do DevOps, bring it, the sec part within it, bring security within the development processes, within the business processes, and I think it can go very fine with the already models that we have. One more thing on the digital, I think, transformation is that we have to use customer experience to personalize the digital stuff for our customers. So there, I think there's one additional bit to bring in the privacy standards like GDPR, or Pakistan has also brought in PPD, I think something like that. So I think that is an important aspect while we collect customer data to personalize the digital experience for the customer, so we need to take care of that data. I think it's very important to build the trust. So I think all the standards that we have, we just need to reuse them at the right time into our projects, and I think it can be achieved.
Okay, thank you. Ali, we have digital banks into picture now. State Bank has granted licenses to 5 digital banks. And then we have the incumbent banks coming into digital initiatives and adopting technologies like cloud computing, AI, ML. So what sort of key considerations are you looking at when these banks adopt these technologies in terms of security and strategizing security?
Okay. Well, every emerging technology, I mean, if we want to integrate it or we want to adopt it, I mean, it comes with its unique cybersecurity challenges. And through proper risk assessment, we should consider all these cybersecurity challenges or all these cybersecurity risks, actually. So, for example, I mean, if we were going to adopt cloud security, there is a common myth that security in the cloud is the responsibility of the cloud service provider. Some people think that security is basically, cloud is not secure. But these are just the myths. I mean, we need to basically see that how things are actually on the ground. For example, in the cloud, you need to clarify the data ownership and how the shared responsibility matrix within the cloud actually works, basically. The cloud service provider is basically responsible for the part of the infrastructure that they're managing. But if you're running any application over that cloud, if you're having, for example, virtual machines, I mean, then you're responsible for the patch management, you're responsible for the protection of your data, you're responsible for the access control. You are responsible that who can take what kind of actions on what kind of data, basically. So even if you're moving to the cloud, the security considerations are mainly the same. I mean, you need to consider how data will be accessible to authorized parties, which data should not be accessible to anyone other than admins, and then I mean the next consideration is basically to build the security from the design. I mean, you have to integrate security into the design of your application. The security requirements should be integrated into the design. It should be incorporated into the development phase and then the deployment phase. So you have to adopt DevSecOps properly so that in the pipeline of your deployment and your deployment delivery integration, the security should be built from the start. For IoT, I mean, similarly, you need to consider that IoT devices basically they handle vast amount of sensitive data normally, and sometimes they send back that data to the cloud, to the application in the cloud. So you need to basically ensure that the data that is being sent is sensitive. It should be encrypted in the transit, and it should have strong access management controls or identity and access management controls. Plus, you need to see that what kind of security products are available or security functionalities available with the cloud service provider. For example, the logging, the security access groups, the firewalls. You have to deal the security in the same manner that you deal in your basically on-premise.
Yeah, so it means that it's the responsibility of the customer to evaluate even the security of the cloud service provider, because when you host softwares on the cloud
service providers normally basically they do conduct their external third-party audits regularly. So you have to go and check their audit reports whether they're complying with these standards or not. So in that way you can ensure that basically this cloud service provider is basically better than.
Okay, thank you. Asif bhai, last question from you. This digital transformation is an ecosystem. It's an ecosystem of customers, suppliers, stakeholders, employees, people around this ecosystem. Now, when it comes to cybersecurity, strategizing this digital transformation journey, so what sort of trust relationship would you suggest that this ecosystem should have in it to maintain within all these people?
So, Vish, I think one of the important elements that we see as part of digital transformation is that we introduce a lot of new technologies, a lot of new platforms. We talk about, I think throughout the day, we have talked about blockchain, we have talked about robotic processing, we have talked about cloud computing. So a lot of data privacy elements, a lot of other risks are basically open as a result of this transformation initiative. So from an oversight perspective, I think one of the important element is the awareness part throughout the players in the ecosystem. So awareness at the business level, awareness at the customer level, awareness at the staff level. As you know that from a cybersecurity aspect, human element is the weakest element. So a lot of it is to do of how we are kind of analyzing the risks, how we are spreading the awareness in the organizations, so that each and every individual is contributing to the overall security spectrum of the organization. So that's what I think about.
Yeah, thank you, Asif bhai. That sums up our discussion. If time permits, we can have a couple of questions from the audience, or are you more eager for to have lunch? Okay, yeah, please.
Assalamu alaikum. I have actually two questions. One is like, you guys are pretty calm guys, so it looks like security is very in control. Probably you guys have a lot of firewall in front of you. But how ready you are to adopt like metaverse kind of a challenges or digital world into the banking? So how CISOs are, prepared?
How CISOs are prepared
for like upcoming challenges like
upcoming
a metaverse.
challenges.
And also my second question would be like, since you are a very calm guys, how do you day pass by if something goes wrong or you got like some sort of incident happen?
We are looking calm because we are on stage here. So it's the requirement. But definitely, cybersecurity is a very happening field, and we deal with many, happenings throughout the day. Any one of you could, answer the question?
Well, the main principle of cybersecurity, basically to ensure, you've heard about the CIA, right? It's to ensure the confidentiality, integrity, and the availability of the information. So this is the main principle, basically, that we need to ensure. So whatever technology is coming, any new emerging technology, if it's coming, then you just have to focus on the technology or learn the new part of the technology. The goal will remain the same. The information should be not accessible to unauthorized parties. It should be, you should ensure the integrity of the information that is being processed by the information systems. And the information should be available to those that need access when required, to the legitimate parties. So anyone else? So basically the principle is same. You just have to learn the technology. So users basically learn new things every day. So I think, whatever comes up, we'll be ready, inshallah.
I would like to add some points here. Like, the most important element here is stick to the basics. Like, if you are doing your basics right, you are doing your job might possibly 80% right. So stick to the basics. You need to perform your risk assessments. You know what are the applicable threats to the digital business or the regular business, or so you need to work on these baselines. You have to patch your systems. These are the basic things which, if you are covered, then most probably that you have implement most of the controls. Thank you.
So it's Ahmad from C Square. Question might sound lay because it's coming from a millennial who only trusts the AI of Snapchat filter. So when we are talking about implementing AI in the banking and financial sector, we are talking about use of AI. But what about AI use versus AI use? I can mimic a person's voice through AI for a biometric verification. I'm also using AI to receive AI. How can we convince the audience who are using it for this kind of issues? Secondly, is creating a lack of cybersecurity ethical professions, isn't it because we stepped late in the cybersecurity domain that promoted the unethical use of AI, understanding the technology for their growth rather than a professional way of being a cybersecurity professional at well-known organizations. Thank you.
Any one of you? Okay, one thing, you talked about AI and mimicking voice and using AI, in fact, abusing AI by threat actors. So if threat actors abuse AI, we have this AI functionality being used by cybersecurity professionals to counter and to cope up with these threat actors. So AI versus AI, the difference is abuse and use.
I mean, if you look at it, I mean, we were having a conversation, myself and a vice president sitting in an office, and we were talking about ChatGPT, right? Another use case, and we were having a discussion where how the bank users can even being allowed to actually put information in that and start using ChatGPT as well, because whatever you put on ChatGPT, it will be available for the learning model, and it might actually provide the same information to someone else over there. So answering your question, I think you're absolutely right in terms of the ethical hacking. We are late, but I think we're catching up. We have a lot of institutes who are actually teaching ethical hacking. We have increased the numbers of MSSP providers. We have more resources than ever before in terms of what banks have onboarded in terms of their own employees and what we as MSSPs have hired. There's more curriculum in the universities which are training them on that part. I think it's evolution. It's a supply-demand thing. It will eventually balance over there. But coming to that point where you can use a technology for good, you can definitely use it for bad. So it's how the technology evolves. So I think it's a egg and a chicken situation where it's an evolving thing. I think we all are learning how technology is going to come and how we're going to react to it. So I think it's still in the learning phase.
And especially, not all AI platforms are open source. Most of the technologies that are being used by the financial institutes globally, the AI platforms, they're very closed door. So it is very difficult to, it is very rare that, you can expect them to get compromised.
Yeah. That sums up the session. I would like to thank the panelists for their comments and feedback, and I would like to thank the audience for listening to us. Thank you very much.
I guess I don't have to announce lunch. This concludes our 2023 Future Banking Summit. Touchpoint has ensured that nobody goes home hungry. Please enjoy the lunch. Cheers.